Let's talk about what's happening in France. The French President Emmanuel Macron meeting with more than 200 mayors to assess the riots that have rocked the country. A massive police deployment is still very present on the streets of France. What we have seen is a drop, quite a significant drop in the level of unrest. We certainly saw that last night. Are we going to continue to see this story ebbing away? Are we going to start to see maybe some order being restored? Let's find out. Our Paris bureau chief is Alan Katz. Alan, what is expected tonight?
So far tonight is looking like it will be somewhat like last night, which is actually a much lower level of violence that we've had. It's been going down for the last few nights. That's expected to continue at least for tonight and for the near-term future. In that meeting that you mentioned that President Emmanuel Macron was having with the mayors, he said that, he was very tentative, but he said it looks like the peak has passed in terms of the violence. And he spent more of his time talking about his efforts that he was going to commit to trying to help them rebuild, businesses or libraries or public buildings that were attacked during these riots.
Do we know how much damage has been caused?
Well, it's early days yet, but we've had a few estimates so far. So the MEDEF, the French business lobby, this morning said that at least $1 billion in damage had taken place or had been visited upon sort of private businesses. So that's, stores and bank branches and tobacco stores and the like. We have the French Insurers Association, which said that it had so far received about 280 million euros in claims so far. Now, that will go up by a lot. Traditionally, insurance companies in France allow 5 days after an incident for a store owner to file a claim, but they've extended that to 30 days now, so that number should go up quite significantly over the next days and weeks.
Alan, is there an expectation that if we do see a continuing fading of the violence, that is it? How dry is the powder that could be relit?
Well, that's the million-dollar question, Guy. The answer is traditionally the way that these things work, particularly in the modern sort of social media age, according to some sociologists that we've spoken to, is that 3 days after an incident is when you have the peak of violence, if violence occurs after an incident, and then it goes down from there. If that trend is followed, then what we've seen is the peak last Thursday evening, actually, or Friday evening, and decline since then. And that would imply that this should actually stay calm for the foreseeable future. But that's a guess, really. No one really quite knows. As you mentioned at the very beginning of this segment, the police will be out in force again this evening. No one's ready to say it's entirely over yet, but it certainly looks like the trend is that direction.
And how does this change? How does this alter the trajectory of Emmanuel Macron's second term?
Well, one thing that it alters is that it puts him back in a position of having to think about France's impoverished suburbs. This is something that he talked about when he first came into office in 2017. There was a report in 2018 about with a plan of what to do for the suburbs. I mean, there have been a dozen plans over the last 20 years in France over what to do about its suburbs. This was another one. Macron at the time dismissed it and basically has done relatively little. I don't want to overstate the lack of things he's done. He has done a few things for the suburbs, but he hasn't had a big program for it. And what he said is he needs to, they need to first really get detailed information on what the specific causes were for this particular outbreak of rioting beyond the proximate cause of the police shooting of the teenager last Tuesday, but sort of the deep underlying issues before trying to come up with a response to it. But he is going to have to deal with the suburbs in a way that he sort of avoided, or in large part avoided, for the last several years.
Is there a concern that this could ultimately end up impacting the tourism season this summer, which is expected to be one of France's best? So that if the violence stays down, then the answer is probably not. There is a guy, I was reading comments from a guy who runs a big tourism agency in France, and he was saying that there have been some cancellations for early July, so right around now, in the next few days, from people who have been worried about the rioting and the violence.
again, it's been going down every day for the last 3 or 4 nights. If it stays low,
Yep.
then it's unlikely to have a big impact. If it shoots back up again, even sort of moderately, then it might actually have a big impact, because then people say like, oh, in fact, this could flare up any time. Therefore, I might put off my vacation to France, even if it's in mid-August or something like that.
Alan, thank you very much indeed. Alan Katz, our Paris bureau chief. Okay, what have we got coming up for you in the next hour? We're going to carry on a conversation about what's happening in these markets. Quiet day today. This is the picture that we find ourselves with at the moment. European equity markets basically going sideways. Look at what's happening with OMV, though. There is a story that hit the wire a few minutes ago. Abu Dhabi, the UAE, and OMV in talks to form a $30 billion global chemical giant. That stock responding very strongly to that news, up by nearly 7.5%, more than 7.5%, nearly 8%. Euro dollar, pretty much everything else very quiet today. As I say, the United States is out. It is the 4th of July. As a result of which, no real fireworks in financial markets. Coming up, Emma Wall, Hargreaves Lansdown, head of investment analysis. That conversation next. This is Bloomberg.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Tuesday, the 4th of July. No financial fireworks today. Is it, of course, a holiday in the United States? Markets are closed. The volume is light. There's a few interesting little stories that we should be talking about. Plus, of course, we need to look forward to the second half. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Alex is off today. She will be enjoying the fireworks. I don't have any fireworks to talk about. Look at what's happening with the Stock 600. Equity markets are pretty boring today, aren't they? They'll get more interesting, I promise. The end of the week is certainly going to bring fireworks. We've got the payrolls number to get through. Brent crude is interesting, though. Look at this. We've got a rally in the commodity, up quite strongly today, up by over 2%. There is light volume, but it is interesting that we are seeing this move. We've got a big meeting in Vienna tomorrow as we get this biannual OPEC forum that is going to be taking place. Keep an eye on what's happening with crude. Keep an eye on what's happening with the Aussie dollar as well. Up by 0.4% against the US dollar. The reason for that, a hawkish hold today from the Reserve Bank of Australia. Didn't raise rates, but is signaling that more rates are still to come. That seems to be the message from most central banks right now. So that's the story today. It is going to get more interesting as the week progresses. As I say, we're building up to the payroll number Friday. But let's talk about what the first half has delivered. This, I think, is an interesting chart. We've been talking about it all week. We're going to carry on talking about it. This is what has happened so far this year. If you've been in tech, you've done well. If you've been in Japanese equities, you've done well. Europe has underperformed. Europe's the blue line here. White line is what's happened in Japan equities. You need to currency adjust to get a real picture. But the tech story has been absolutely sensational since the start of the year and has caught everybody by surprise. Europe has underperformed. The equal weight S&P has underperformed. But our question of the day is a fairly straightforward one. Where are the financial fireworks going to be in the second half of the year? If you want to play catch-up, where do you need to be in the second half of the year in order to bring your numbers back in line with the rest of the market? Joining us now to discuss, Bloomberg opinion columnist Marcus Ashworth and Bloomberg's Michael Masika. Let's kick it around. Marcus, you're a portfolio manager. You're behind. How do you catch up in the second half of the year?
Well, I think you've had plenty of time to watch and wait this first 6 months, and I think there will be better opportunities in the second half, particularly in bonds. And that's where I think the fireworks are going to be, because I genuinely think the Bank of England and indeed the Fed and the ECB in slightly lesser degrees are overdoing it on hiking interest rates. I don't think they realise what's going on in the invisible economy. I don't think they can understand truly the effect of all the monetary tightening they've done already. That lagged effect's going to come through. I think that's going to really feel the back
So the
half.
cuts we've priced out are going to be priced back in again?
Essentially, buy bonds. Probably at some point there'll be a sweet spot. And that's not great for equities, but maybe Mike's got a better idea on that.
Okay, so if I'm behind, I'm a portfolio manager, I'm behind, I'm going into the second half of the year, I need financial fireworks. What is going to get me back to my benchmark? What is going to get me to outperform in the second half?
Well, Guy, that's the tricky one. To come back to what Marcus was saying just earlier, I kind of agree, unfortunately.
No, don't do that. Never do that.
Don't worry, I'll come to other stuff after. But I kind of agree on the fact that bonds are starting to look more and more interesting. The problem is, like, we came from a period where there was no alternative to equities. It was equities. Yep. Now, you've got fantastic yields on even investment-grade bonds. I mean, they yield more than the forward dividend yield on the Stock 600. So that means you have alternative. When you're a multi-asset portfolio manager, you can balance that out.
If you're not, what if you're an equity portfolio manager?
Well, in that case, if you follow what a lot of CIOs and a lot of strategists are leaning to, which is the second half of the year is not going to be as good as the first one, you have to look at sectors that might either catch up or outperform. And at the moment, a lot of people are leaning towards the defensive sectors that have lagged the market in the first half.
But that's precisely, this is where it's underperformed. But am I really going to catch up doing exactly what I did in the first half? Do I just have to wait for the market to come back to me?
Well, let's put it this way. If you are exposed to the right sector that are not going to drop a lot in the second half of the year, if you expect the market to drop, like a lot of people do, then you will outperform your benchmark.
Yeah. I think the point is that it used to be going stock selective, as in pick individual stocks. Now it's sector selective. So you should be very grateful if you've ridden the tech wave up, NASDAQ, Japanese stocks, things like that have done well. You should count your lucky stars, bank as much as you can, sit on cash or near cash.
Okay, sit in cash. So I sell the winners in the first half.
Well, I think you should take some profits from it and not get too greedy. Because there will be opportunities. And that's the whole point of sitting in bonds or liquid instruments so you can get out and you'll have the chances. It's the not getting too greedy in the second half of this year, because there is a risk, increasing risk. It may happen in the first half of next year. There may be a recession in the major economies of this.
There's also going to be a liquidity issue in the second half, which is gradually sort of coming to bear. Central banks are tightening liquidity. TLTROs are being withdrawn. How big a factor is that going to be in the second half of the year?
We just don't know. It could have been a factor in the first half. It clearly wasn't. We've seen the Fed and the Treasury.
Well, there was extra liquidity in the first half, wasn't there?
Yeah,
because the banking crisis, etc., basically pumped a whole load of extra money.
Well, the TLTRO thing again in European, you would think that the European banks may be really starved of liquidity, but they seem to be managing. But there may come a point. I'm not saying will. May come a point when they don't. And that's the situation you do not want to be in equities. So that's my point, is stay fairly nimble, stay liquid. If you have some gains, don't get too greedy.
The first half of the year, massive surprises. Nobody would have expected to be where we are now, having started this year. Is the second half of the year, why do we think that the second half of the year is going to be more predictable? Do we think that the second half of the year is going to be more predictable?
Well, a lot of people predicted the first half would be bad and they got it wrong.
Yeah.
So I guess the same thing can easily happen in the second half. And, you know, investors can be sucked in that market. They may have to chase it because they need to, and stocks might go higher. Now, having said that, we've got a lot of data coming that is showing things are deteriorating. There's a little cracks appearing in the US, just little.
Yep.
The US economy is still doing very well, but if we have some proper negative data coming out of the US in the coming weeks or months, I think, you know, we might be on for a rougher ride.
Earnings season is going to be really interesting. We've been waiting for companies to roll over, but they haven't. The earnings calls have been more and more positive as the year has progressed.
I think they'll continue, at least for a little bit, because you look at retail sales, you look at general consumer spending, it's surprisingly strong in both UK and US, and to a degree in Europe as well. The tourist season is doing extremely well.
Yep.
So as far as generic consumer spending and
is the consumer going to run out of money in the second half of the year?
No, absolutely not. Quite the reverse. It seems what's happening is you almost had a front loading of savings benefits before you've had the hit, the penalty of the mortgage costs coming through from interest rate hikes. So people who have got cash are now receiving a much better income, exactly as Michael was saying earlier. As far as returns are concerned, they've been doing pretty well. What's going to hit at some point will be the recessionary effects, will be the extra mortgage cost, but that seems to be amazingly lagged. So I don't see it this next quarter, but by the end of the year or early next year, it will finally happen, but it's just a question of timing, and that's why a lot of us have sort of anticipated the nasty downturn. The first half, it hasn't happened. Will it happen? Yes, but maybe fourth quarter and third quarter, I would say.
Okay, so if we get some downside, how much downside could we get? Where are the key levels that we're now looking at? Do we go back down to 3,200? Is 4,000 a big line in the sand for the S&P? What are people talking about? Because we've just been sort of ratcheting higher and higher and higher. Does that limit the ultimate downside that when we do see a downturn, it could be?
Well, trick question.
Yeah.
Not a lot of people expect a lot of downside. So if downside there is, the consensus is with mild downside. So we're talking high single-digit top.
Yeah. So is the pain trade up at this point or down at this point?
We are at a stage where we are closer to like top-ish markets, let's say. Like from what the consensus is looking at.
Okay, so if that's the case, the pain trade is higher.
Yeah.
Yes, and it's been higher for a few months already, and it will keep being higher.
Yeah, I think you're right. The fireworks go if equities continue to squeeze up. I mean, I tell you why.
Does Powell get annoyed again? He got pretty annoyed last time.
Yeah, he's done a very good job. Talking about pricing in rate cuts back in the year, he did a magnificent job. The Fed done a fantastic job removing that rate cut expectation. But only so far. I think they will come to a point whereby they will no longer be able to stop the market pricing in rate cuts. That's why I think bonds will do well in the back half. But, I think equities can continue to surprise the upside. It could be quite squeezy, and that's a very worrying situation to be at some point. I just don't know the timing.
Great stuff. Guys, thank you very much indeed. Marcus Escher with the Bloomberg Opinion and Bloomberg News' Michael Masika. We're going to carry on the conversation next, more on our question of the day. Where are the financial fireworks in the second half? Emma Wall, Hargreaves Lansdown, Head of Investment Analysis, will be joining us. This is Bloomberg.
does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Let's talk about what's happening with the UK corporate story today. The grocer Sainsbury's reporting higher sales and also indicating that food inflation is starting to fall. Joining us now, Bloomberg UK retail reporter Katie Linsell. Katie, there may have been some hopeful expectation that they were going to raise guidance at Sainsbury's today. That didn't happen. Maybe that's an explanation for why the stock is down today. But how positive is the picture that the company is painting?
I think supermarkets have a little bit of a difficult job at the moment in the UK, because not only are they talking to their shareholders and to investors, but they're also talking to the broader UK consumer. And there's a lot of pressure on supermarkets at the moment that they can't be making huge margins, they can't be making huge profit because food inflation is so high. But broadly, I think, you know, the message today was that sales are up. In clothing, interestingly, sales were down. It's a mixed picture, but yeah, they kept guidance unchanged.
In some ways, UK supermarkets are an interesting case study. They're working capital businesses. They sell us stuff and then they basically don't pay their suppliers for weeks, if not months at some point. How much cash do these companies throw off at the moment, Katie? At a time when working capital, if they can free it up, generates a huge return.
I mean, the supermarkets are very cash generative, but at the same time, Tesco, Sainsbury's, Asda, all these big supermarkets are following their own strategies to try to actually be as efficient and make as many cost savings as possible. They are very clear to say that they run on very tight margins. Sainsbury's was saying today that it's, you know, 3% or less than 3% margins. So yeah, they're not as.
But if they can. Cash generation is one, but working capital, how much effort is being made to free up working capital?
I think it's something that all the supermarkets are continuing to look at. You know, it's one of the important things they have to be thinking about for their balance sheets. But they've got many moving parts, and the supply chain is a key part they're looking at.
Yeah. In terms of what they expect demand to look like going forward, the UK consumer is being pressed and pressed very hard at the moment. Is there any sign that that is easing?
It depends which data you want to look at. I mean, there was some data out from Asda recently looking at disposable income, and depending on whether you look at the more wealthy households, in that regard, yes, we're seeing salaries increase and we're seeing more wealthy households actually have more money to spend. But if you look further down the scale at those households that don't have quite so much money, they are suffering even more. Those are the ones who already have a huge amount of their spend going on the basics like food and like fuel bills, and things look to be equally as tough there. There's no easing up.
And what is happening in terms of what they're selling? Are we seeing the kind of the longer supply chains down to South Africa and places like that, where they would be previously importing some of their fruit and veg? Are we seeing substitutions? Kind of what is happening with the nature of their supply chains?
Well, of course, not that long ago, we had the sort of, I guess, rather embarrassing situation in the UK where we were very short on cucumbers, tomatoes, and other salad items because we were sourcing so many of them from Spain and Morocco. It was very clear that we'd cut back on production of that back in the UK because it was so expensive with energy use to be doing that. I think that as a result, the supermarkets are at pains to say how much they are sourcing close to home. But of course, these days, value is the key. If they can get it more cheaply from further away, or they have to offer a full offering to UK shoppers, then they will do that. We also had some mention from Sainsbury's today in terms of pricing of items, and they were pointing out that fresh food is where we're going to see prices come down fastest. Where you look at items like packaged goods, especially ready meals, this sort of thing, that's very energy intensive, very labor intensive, that's where it will take longer for prices to come down.
Katie, as ever, comprehensive. Thank you very much indeed. We really appreciate your reporting. Bloomberg's Katie Linsell on what is happening with Sainsbury's. This is Bloomberg.
News breaks. No one covers the world like Bloomberg.
The image of Vladimir Putin as the all-powerful leader has been rattled already. History was made here at the federal courthouse in Miami when Donald Trump became the first ever former president to ever be arraigned on federal charges.
We're going to need a new engine technology, and that's where the real battle lies. And whoever makes that decision first is going to have a huge impact on this industry.
Bloomberg, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this
Is
story.
there the kind of upside?
This is Bloomberg.
We cannot fight, we know this, against inflation without a slowdown, unfortunately. The key question is, when do we rebound after a slowdown? So first on the slowdown, yes, we do expect some kind of a slowdown, but hopefully not recession, and not for long. We know what's going to happen. It's rather predictable, and everybody should be ready to navigate in these circumstances.
Jean Lemierre, the BNP Paribas chair, speaking to Bloomberg a little bit earlier on today in an exclusive interview. Brings us back to our question of the day. Where are the financial fireworks going to be in the second half? Just talking about inflation, what's going to happen there. This market has been surprising, let's put it that way, in the first half. These markets have been surprising. Bonds, equities, commodities. They've all done many different things that we didn't anticipate at the start of the year. Emma Wall, Hargreaves Lansdown, Head of Investment Analysis, joining me now on set. Emma, the first half has been confusing. There have been plenty of financial fireworks. What about the second half?
Well, I think it depends how you want me to answer the question, right? So are we talking about rockets, not to stretch the analogy, or are we talking about those fireworks that completely explode out of the sky? Rockets-wise, I do think there's a bit of momentum left in this market. So if you look at what's been doing really well the first 6 months of the year, let's not forget that it's kind of been 7 names have made up 60% of the gains in the S&P 500. The rest has been okay, but it really has been those big names. I think as long as things start to look positive and we keep seeing that inflation numbers come down slightly in the US, there is some momentum in those names, and indeed Japan, which has done so well year to date. However, we are beginning to see some worrying leading indicators. Look at the sort of the consultancy market and the part-time jobs market. Those figures are starting to get a bit soft. If that is a leading indicator, then the big firework comes with recession, and S&P 500 goes down, and it kind of doesn't matter that valuations look compelling everywhere else in the world. If the S&P 500 goes pop, everything goes with it.
So
correlation goes to 1.
At this point, you wouldn't be chasing the rally much further?
I think if you're in it, you've probably got a little bit more gains to come. Maybe start to take some of those gains off the table. I wouldn't say this is a particularly attractive entry point. That said, I'm not saying it could be weeks. It could still be months, but I wouldn't put it all on black right now.
The beginning of the year, we thought bonds were going to be the big outperformers. They weren't. Equity markets did much better. Does that flip on its head in the second half?
I think so, and actually we have already begun to see demand actually from clients. So at HL, we're seeing clients going in 2 very distinct directions in the last kind of month. They've even been buying Tesla, US growth, leveraged ETFs, or they've been going down money market fund, gold. They've been going into fixed income, strategic bonds, gilts. So there is definitely there a sort of a divergence of opinion, or perhaps they're just hedging their bets of where the market goes next. Yeah, absolutely.
Where does Europe fit into all of this? Europe has been the underperformer. The equal weight S&P actually hasn't done much better than Europe. Clearly, the NASDAQ has, as you say, Japan has. Does Europe come back in the second half? Or is it, as you say, as the US rolls over, as US tech rolls over, Europe struggles to do much better?
I think the central bankers gave us some really good, clear messages last week when they met in Portugal about what they intend to do about interest rates. So, the EU intends to continue to raise interest rates for at least 1 or 2 rate rises, unlike the Fed, which is a more sort of pause, not pivot, but pause. So I do think as long as inflation continues to be sticky, lest we forget Germany is in technical recession, I think Europe, it's a mixed bag. It's not as clear as the S&P 500, but certainly, as I said, S&P 500 goes pop, everything goes with it.
In terms of how the back half of the year looks really tricky to navigate. If we do get a dip, do you buy it? How do we think about downturns in this new environment? Are they, like we've seen recently, V-shaped? You have to buy them, you have to get your moment right. Or are these markets going to come down and potentially stay down as this recession works its way through?
I think it's a really interesting question, right? We're talking about the news agenda here. We're talking quite short term, what's going to happen in the next 6 months. But really investing, as we know, is for the long term. So if we take a step back from some of this noise, actually CAPE, so valuations, looking pretty compelling across the board. Only S&P 500 is sort of trading at slight sort of heightened valuations. Everywhere else looks pretty undervalued. So potentially, if you're willing to look to the long term, even now might be an attractive entry point, and you can keep on buying through that dip. But it's very much a case of looking through the noise, because animal spirits are going to drive the market for at least another 12 months, and that's a bumpy ride.
A lot of people do have money in money market accounts, though.
Trillions and trillions.
Well, trillion, precisely. Are you taking that money when the opportunity arises and maybe sort of extending duration? You buy longer term bonds, i.e. you take out some of the risk. I'm going to lock in a US 10-year at 4%, if you can get that. Same with gilts. Or am I saying, actually, there is a huge buying opportunity coming in the equity markets, and I want to be looking at that? I'm trying to understand which way people are going to look with that cash. Where is the bigger opportunity between the two? And I think it's a really difficult question. If we are going to see equity markets coming lower, am I just rebuilding a 60-40?
I think there's a third option, actually, which is normally money market funds are purely to keep powder dry, right? But actually, at the moment, because interest rates are so elevated, they're an attractive asset class in their own right.
But if the recession comes, that's going to roll off.
This is true, yeah.
So at some point, you're going to have to rotate out of that and make a decision. The moment you don't have to make the decision, you're right. At some point, you're going to have to make some decisions.
I'm afraid I'm going to give you the boring answer, which depends on your risk appetite and the point that you are in your accumulation and decumulation journey. Bonds do have a attractive yields. You know, the 2-year gilt in particular is looking pretty attractive right now. That's short term. Longer term, we are seeing that yield curve invert, but it's still at higher levels than it has been for quite some time. So it depends on your risk appetite.
Great to see you. Thanks for stopping by. Really appreciate it. Emma Wall, Hargreaves Lansdown, Head of Investment Analysis. This is Bloomberg. Closes next. We'll do that in just a moment.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
So we are wrapping up the day here in Europe. We've been left all alone. Of course, it is the 4th of July over in the United States, as a result of which their markets are closed, ours are quiet. And that's certainly what we've seen here in Europe. Broad selling, but it is minimal selling. The DAX is down by 0.3, the CAC's down by 0.2, the London market, the FTSE 100 down by 0.1%. As I say, volume has been super light. This is how the session has developed. Let me just give you an idea of what it's looked like. There's not much signal here. It's a tight range. We've been in it all day. The 600 is up by less than 0.1%. We'll see what the auction brings. But basically, a very, very tight range. In terms of the sector story, I think you've seen some real estate stocks doing relatively well today. A few upgrades have come through into that space. We're still watching, obviously, the rates impact. Healthcare's bounced back. Technology's doing okay today. The luxury sector's doing okay. Cars, construction, and industrial services are down. But again, do not read too much into the price action of today. The only place I think you can really take something away from this session has been in the single stock names. You've seen some caution around the UK housing story. We've seen the 5-year fix in the UK go through 6% today. That's a meaningful moment. You've also seen JP Morgan out with a relatively negative note on what is happening with UK house builders, downgrading Persimmon for one. This is the third biggest house builder in the UK. That stock down by 0.2%. OMV's having a much better day, though. The chemical sector set alight by news a little earlier that potentially we are seeing OMV talking with the UAE, with Abu Dhabi, about forming a new chemicals giant. That would have a meaningful impact on a space that has been finding life quite difficult recently. Chemicals front and center today. OMV up by 7.45%. Ryanair up by a little bit today. It's interesting to see what Michael O'Leary's talking about when it comes to demand story going forward. But they are seeing load factors in the mid 90%. I think it was 95%, which tells you about how strong demand is right now. But like the United States, we are seeing problems continuing with Europe around what is happening with air traffic control, what is happening around baggage, what's happening around airports. These issues are not going away. And the summer is going to still be, I think, a fairly bumpy one. But nevertheless, Ryanair up by 0.2%. Today was quiet. But tomorrow, I think the real action starts to begin. We're building up to a crescendo Friday with the payroll number. We get the OPEC International Seminar. That's a biannual event. It's basically OPEC ministers, big oil companies, interested parties getting together in Vienna to discuss the future of the oil industry. Land Security's out with its AGM. Keep an eye on that. The message from the commercial property sector, fascinating right now. We're going to get Turkish inflation. We've already started to see rate rises coming through from the newly formed team in charge of finances in Turkey. What is tomorrow's message going to be on that? And then we get French, we get Spanish industrial production data. Industry continues to struggle at the moment. Are we getting close to a bottom? I think it's going to be one of the critical messages that we need to watch for out of that data. The foreign policy story continues to be front and center as well. We are continuing to watch events unfold in Ukraine. We're continuing to watch the story develop with the Chinese as well. Remember, Janet Yellen is going to be going to China later on this week. We've got a fascinating conversation now. I want to take you to Brussels. My good friend and colleague, Maria Tadeo, is joined by the Spanish foreign minister. Maria, over to you.
Yeah, and Guy, I'm not sure how good your Spanish is, but watch out because I'm Spanish. We're joined by the Spanish foreign minister, and of course, this is the Spanish rotating presidency of the European Union. So I would put you to the test, but I want to be nice to you, so we're going to do this in English. Spanish foreign minister, José Manuel Álvarez, thank you so much for joining us on Bloomberg. And thanks so much. And obviously, I know you're busy, and I know you're prepping for next week, which is going to be a huge week for diplomacy. We have the NATO meetings. And my question to you is very simple. What's going to happen with Ukraine, and what's going to happen with Sweden? Will they finally get into NATO?
We will have to discuss on the table in Vilnius, but the mood in which Spain is going is we have to move from what was already agreed in the summit in Bucharest concerning Ukraine. We have to show unity, as we are doing also in European Union. NATO has to show unity, as we have been doing since the beginning of the Russian aggression. And I hope that Vilnius will be the end point for the accession of Sweden to NATO.
And can I ask you, however, you say we need to move past Bucharest, and the Ukrainians will agree, and they say that was a mistake, that we were not given a real perspective. The Ukrainians say by the end of the summit, we want a sentence that says when the war is over, Ukraine will join. Will they get that sentence, in your opinion? You must know the mood in the room at this point.
It's not up only to Spain. There are all the other countries
Would you be okay
around.
with that?
We are moving towards that, and I'm sure that the wording will capture that sense. And there are many other things that we are going to do. There is the NATO-Ukraine Council, in which Ukraine will sit on equal footing with all the NATO members. We can help Ukraine to move from a sort of Soviet army to a NATO NATO-compatible army. There are many things I'm sure that will get out of that summit.
And of course, there's been a lot of talk too about the Israeli model for Ukraine and this promise over time. But again, what I pick up from you is that the actual consensus, this is still in the works. As it stands right now, we don't really know what will happen in the Vilnius summit. The wording is still being debated.
We are still working on the wording, which is normal. There are still many days to go. It's a very serious subject, but I can speak on behalf of Spain, and definitely Spain, and I'm not the only country that will be on the table that thinks like that, is that it was clear what we said in Bucharest, Ukraine one day will be a member of NATO. Now we have to move forward and show a path.
And the same applies to the European Union? The Spanish perspective is that you support Ukraine entering the European Union?
Absolutely. There is a status of candidacy that has made by consensus. And Spain, of course, will foster as much as possible that path. We are waiting for the opinion of the Commission that will be out in October. As soon as it is, Spain, as presidency, will move forward as much as possible.
Of the European Union. So you believe accession talks this year for Ukraine is a possibility?
It's a possibility. It's more than a possibility. It might be one of the things that during our presidency, if we count that the opinion of the Commission will be out around the month of October. From there on, I cannot speak on behalf of the Commission. I will have to wait and see what is there. But if they meet the expectation, that's a possibility, definitely.
And now let's go back in time to the NATO summit in Madrid, which you hosted last year. I remember you and I spoke at the time, and that was a flurry of diplomacy. But one of the things that you managed to do was to get Erdogan of Turkey, the Swedish and the Finnish in the same place with the Secretary General and get that okay to enter NATO. What we know now is that the Finland or Finnish are now a member of NATO, but Sweden finds itself in a very difficult position. It seems they're in no man's land at this point. Will they finally get the okay from Erdogan next week?
I hope so. Spain has already ratified the treaty bilaterally, so Sweden can join. All the security concerns of all the NATO member countries must be met. Also the security concerns of Turkey. But as far as I know, things are moving well, things are advancing well, and the bilateral dialogue between Sweden and Turkey is going well. My wish, the wish of Spain, is that Vilnius will be the moment in which we will have Sweden definitely within the family.
So you say, at least from the Spanish perspective, our position is clear. Sweden has to join, and that is it.
Absolutely.
And I wonder, however, because, again, going back to Madrid, you were there where Erdogan was the star of the show. Everyone had eyes on Erdogan. Is this a tactic that he plays? Is this real concerns that he may have? Is there an understanding that you can get to in what is now days before that summit starts on the Tuesday?
Turkey doesn't oppose to the accession of Sweden. Otherwise, it would have put a veto to even signing the. So that's the important thing. They are not opposed to the accession. There are some security concerns that must be from the side of Turkey that must be met. And this is a matter of the bilateral dialogue between Turkey and Sweden. And things are going well. So I'm confident that it will be the end point or the beginning of the end point.
And the NATO Secretary General, who has been extended for another year, is Stoltenberg. He repeated that message, that he hopes this is finally completed and that security of the Nordics also completed. From the Nordics, however, I want to go to China. When I say China, what do you think of? Is this a friend? Is this a rival? Is this no decouple, but yes, major de-risk? What does that mean to you?
It's a big power, and we have to count on it. It's a big power from a military point of view, from an economic point of view, from a population point of view. And there are global challenges that we will not be able to meet without China. Climate change, just to put the most important one. We are in a dialogue that is a very open and frank dialogue with China. On trade, we want an leverage and equal footing for everything concerning for trade. And every time when we have met with the Chinese authority, we have asked them to use their influence on Russia and very specifically on Vladimir Putin to bring peace back
and
to
are
Ukraine.
they doing that? Because a lot of people say no. If Xi Jinping wanted to mediate, he would have done it already. It's wishful thinking.
It's very important to count on them, and they have always wanted to engage with us every time we have raised the conversation, so I would say they are in good faith.
And what about your relationships then with the U.S.? Again, they talk about this is the tightest we've ever been, but we've seen trade relations at times where obviously they want made in America and you want made in Europe. How do you see this partnership going? Also, because there's an election next year. That's the elephant in the room. Let's be clear. Could be the return of Trump.
The United States is the natural ally of European Union, and Spain and the United States.
The best ally?
It's definitely our natural ally, and we have been together through the toughest time of all our recent history. We are right now facing the threat of Russia towards Ukraine and Europe. The president and myself, we were in the White House May the 12th, and we were discussing all the issues around common values. We are NATO allies. We have a Euro-Atlantic security, and we share the same concern for climate change, for multilateralism,
but that's with
for
Biden.
democracy.
But that's with President Biden. What if there isn't a repeat of the Biden presidency? Is that going to be a problem?
It's up to the American citizens to decide who is going to be their president. What I can tell you is that my government feels very comfortable with a government and an administration like Biden's administration, an administration that believes in multilateralism, that has brought the United States to the Paris Agreement, that is showing commitment to Euro-Atlantic security. And therefore, during the Spanish presidency, we will also foster that unity.
And you talk about your government, you talk about the Spanish presidency, which you have at the end of the year, but you also have an election coming up. When I look at the macro indicators for Spain, you're obviously growing, inflation has majorly come down, and yet you're still trailing in polls. What is going on? Where's the gap between your performance on the economics and the fact that you're not leading polls?
The only polls that count is the final vote that will have.
You believe you're going to win it?
That will, of course, that
you
will
will
take
win the
place
election.
July 23rd. And as you say, the economy is boosting. We have 21 million of people affiliated to Social Security. It's a total historical record.
But why isn't it feeding more then?
Just to give you some figures that are important, one of the lowest inflation in Europe, a growth that is double the medium average of European Union. And we are doing that, and at the same time, we are protecting people. We are increasing minimum wage. We are increasing pension rights as it has never been done during our history. And of course, there is a lot of noise, What
do you mean by noise?
Fake news, personal attacks to the president, and the campaign, the political campaign that we are undergoing is there to clarify, to explain, and to separate what is noise, fake news, from what are the real facts. And the real facts is that we are showing that we are managing well the economy, and at the same time that we are protecting people as it needed, facing the social and economic consequences of the Russian aggression to Ukraine.
And just very briefly, though, if you do get a government that is conservative and includes Vox, would you say this is the far right? In my view, it's the far right.
Of course it's the far right.
So Spain would have a far right government, in your view?
They don't hide themselves.
Because a lot of people don't believe that. The voters don't seem to believe that.
They don't hide themselves, and they are things that are against the central part of the European agenda, as biodiversity and climate change, equality, LGBTIQ rights, things that are essentials, that are around the main part of the green agenda of Europe, and also that are the core values of the European construction.
Well, thank you so much. And you made it clear that you do believe the Spanish Socialist Party will win the election. I'll be in Madrid, so if you win, you have to do an interview with us.
I will.
From the steps
Definitely
of the Congress. Well, José Manuel Álvarez, thank you so much. Of course, Spanish Foreign Minister, thank you. Always a pleasure to seeing you on Bloomberg. And Guy, I mean, you heard it there. He said, if we win, we're going to give you an interview. So I will be going to Madrid for that.
Oh, yeah, you've got to get these things nailed down. Maria, great work.
I have to go.
Thank you very much indeed. Yeah, you've got to go. Well, I think you are going. And we look forward to the coverage. Thank you very much. Fantastic interview. What are we going to do next? Greece says it's going to make early repayments on its debt bailout. We're going to have an exclusive conversation. We're going to have part of our exclusive conversation with the Greek Prime Minister. That's next. This is Bloomberg.
is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
So Kyriakos Mitsotakis, the Greek Prime Minister, says his country will aim to accelerate paying the country's bailout debt off. He spoke a little earlier today to Bloomberg's Francine Lacroix in an exclusive interview in Athens.
There's currently a lot of capital that cannot invest in Greece simply because we're not investment grade. As you know, we are already trading as if we are an investment grade country, but we also need the official stamp of approval by the rating agencies. I think it will further lower our cost of borrowing, which of course is important in a high interest environment. We've been able to defy the trend. The Greek economy is going to grow significantly in 2023. And this is also giving us a fiscal space to further reduce our debt. We will be able, before the end of the year, to actually repay ahead of time our GLFA facility for the next 2 years. And I think this will also send a positive signal to the markets that not only are we focused on growth, but we also want to make sure that our debt to GDP ratio continues to decline at a very rapid pace.
Francine Lacroix speaking exclusively to the Greek Prime Minister. The full interview is going to be on Leaders with Lacroix. The airing date for that, the 19th of July. Coming up, it is, of course, the 4th of July. And in the United States, traditionally, this is a key period for Hollywood. We're going to look at box office trends and see if moviegoers are really back in the theaters. There's some great movies coming up. This is Bloomberg.
Ethan, this mission of yours is gonna cost you.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it is causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
I find this impossible to believe, but it seems as if Indiana Jones has not lived up to expectations. It feels like an impossible thing, but apparently the fifth film in the series, which opened over the weekend, ticket sales were a little disappointing. Theaters are clearly trying to bounce back, and there are some big films coming up to help them do that. But we've got the writers' strike. Potentially some of the superstars are going to be joining that as well. It's going to be a big summer for Hollywood. Paul de Garbedian joining us now, senior media analyst at Comscore, to give us a take on what is happening. I'm curious how Indiana Jones has missed expectations, but maybe expectations were super high. Paul, what kind of a summer are we going to see?
Yeah, we're in a pretty incredible time right now for movie theaters, and as you mentioned at the top of the segment, there's a lot of headwinds going on, the writers' strike, and some movies that underperformed a bit, including The Flash. Some people thought Elemental underperformed, but it's still doing well. It's holding up week after week. But Indiana Jones, I mean, think about it. If you went a time machine, went back to 1981 when the first film was released in the summer of 81, if you'd imagine, hey, in 2023, the fifth installment of this franchise would be #1 at the box office, people would have said, hey, you've had too much popcorn or soda. But again, I think expectations were so high. This is an iconic character, an iconic franchise. Harrison Ford, ostensibly or presumably his last turn as Indiana Jones, and yet 60 million domestic, 70 million internationally for 130 million worldwide. I think, again, with all the gravitas, all the build-up to this, but again, at the Cannes Film Festival, the screening of this received a bit of a lukewarm response. I think that sort of set the tone for the film and how it was going to perform.
Expectations are high. Mission Impossible's back as well. What are you expecting there?
Well, this could be a franchise best opening for the Mission Impossible franchise for Dead Reckoning Part 1, which has been getting tremendous buzz already, and I'm hoping that positivity, plus the tailwinds provided by Top Gun Maverick, which opened a year ago. That was the movie leading the charge in the summer of 2022. So you have Mission Impossible Dead Reckoning Part 1, and then a week and a half later, you have the Barbie Oppenheimer weekend, which I think everyone's going to be looking at that because they're two very different movies, mid-century icons, if you will. So pretty interesting.
Yeah. It is quite very different movies, I think it's fair to say.
Yes.
Are movie theaters going to make money? Are the studios going to make money this summer? Enough money to put the ship back on an even keel?
Well, I think for theaters, there's plenty of movies. Box office year to date is up about 18%, according to our Comscore data. The summer is about neck and neck with the last summer. But with all those big movies on the way, I think the theaters are in a great spot. For studios, though, their financial dynamics are different. And certainly, if you spend $200 million to produce a movie, you're going to have to make a lot of money at the box office to become profitable. I think it's a heavier lift for studios than theaters right now. Theaters just want a lot of content. That's what they have right now. We're going to have about 30 more wide release movies this year than last. And that's good news, because without that steady stream of movies, you can't have strong box office.
Paul, what impact is the writer's strike going to have? And I see there's talk now of some of the stars joining in.
Yeah, that could be huge. I mean, definitely right now, the movies that are in theaters have already been written, of course, but the writer's strike has implications beyond that. If actors then go out, I know they postponed a walkout or whatever it was going to be, or a negotiation. And if that goes on for a very long period of time, then that could start impacting the production pipeline of movies going to theaters. Certainly for streamers and small screen content, which has a greater churn and more quickly going from the page to the screen, small screen, if you will, that's going to be an even tougher situation. So the industry is really on pins and needles, hoping that gets resolved equitably for all involved.
Paul, have a great weekend. Really appreciate the update. It's going to be a fascinating summer.
I appreciate
Enjoy. Paul Derrigar-Obedian joining us, Senior Media Analyst over at Comscore. Okay, that just about wraps things up for us. Have a great 4th of July, everybody. Enjoy the fireworks. Alex is going to be back with me tomorrow. We've got a busy week coming up. Remember, we're going to be culminating with that huge payroll report coming out on Friday. We're certainly going to be counting you down to that. Enjoy the rest of the day. We'll see you tomorrow. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point! From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
The top names in business are on Bloomberg.
For Indigo, this is a 500 planes order. That's the biggest order ever in terms of number of planes. It doesn't change the short-term perspective on ramping up the production.
All our aircraft deliveries are delayed. The supply chain that was really decimated during COVID.
It's a real challenge for all the OEMs at the moment, but we absolutely have to have those aircraft delivered on time.
Nobody covers business like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Get your your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Even in the land of superstardom, there's always some new Hollywood hill to climb. And these days, it's not enough to just be a megastar. Everyone also wants to be an entrepreneur. Over the years, I've seen plenty of famous faces attach their names to new business projects, launch their own funds or startups. And with the power of social media, celebrities can cut out traditional marketing and empire build in a whole new way. The problem is, the very same platforms that can give any celeb that boost can also be their downfall. Today, I'm doing something I never thought I would do as a business journalist, heading to meet my next guest on a soundstage in a very special bathroom. Hailey Bieber, wife of one of the most famous pop stars in the world and daughter of the famous Baldwin family, is using a celeb to entrepreneur playbook. Step 1, launch beauty brand. Step 2, go direct to your audience on YouTube. I'm here to find out how she's putting this content to commerce strategy to work.
Her hair is so thick, she only needs a few.
Duh. Hello. Hello. How's it going?
How are you?
Good.
Come sit.
What are the must-haves in the who's in my bathroom glam routine?
I'm always so big on the skin prep.
Yeah.
So it has to be really good, like hydrating, dewy, moisturizing skin prep. I'm pretty fast with glam though. Like, I just don't like sitting. I'm so antsy. Like, I didn't like sitting in school either. Like, I don't like taking too long.
So what's your prep routine? Like one interviewer to another?
I like for it to flow very naturally. It's kind of like going on a date.
In what way?
Like, you just ask the person about them and get to know them.
The best interviewers too, I feel like, are good listeners.
Totally.
You're going direct to your audience with this. And, you know, the internet's not always a nice place. It's been kind of hard on you sometimes, hard on your marriage.
It's a more comfortable experience for me that way. I think it's really hard with the internet as it is about, you know, there's narratives that exist for anybody who's in the public eye, and there's narratives that exist for me that really hurt my feelings and make me really upset. But I think that I have had a lot more comfort in being able to create my own content that I have control over, that feels good for me.
How are you evolving how you use social media, whether it's YouTube or TikTok or Instagram?
I've found for YouTube to be a really embracing, positive place. I have a love-hate relationship with TikTok because I found for it to be a very nasty, negative place. When they're talking about you, you have a face and a voice to the things that are being said, so it feels a lot more of like a personal attack on you when you see someone vocalizing it.
We've seen so much of you behind the scenes, and like, how have you gotten comfortable with letting people see you so vulnerable?
I do think it has helped people to see more sides of me, and I think when they get to see me in these different settings, they can at least just digest it and be like, oh, okay, like, that seems like that's how she is, and this is what she does, and that's her job, and I would just rather let people in a way that's comfortable for me than always having assumptions be made about who they think I am.
I just want to let everybody know we're getting really close. If you are sitting behind in the sight line of this stage, please keep your movements to a minimum.
I feel like you love the 90s working girl look.
I do. I really do. I love the blazer. I love anything very Princess Diana inspired.
Is there something about the business look that appeals to you?
I like when you see in a lot of business style things like a structured shoulder, a great power suit. I've always kind of gravitated towards stuff like that.
So I hear it was entirely your idea to not just shoot in the bathroom, but eat in the bathroom.
The concept really did come from like when you're having a night out and you're like in the bathroom with your drink and like fixing your makeup and you're like chatting with your girls like, oh my God, like my ex is here. I always tell people that, like, you can go to the Met Gala. Like, the most crazy part of it is, like, happening in the bathroom.
Before take one. Action on Haley.
What's up, everyone? It's Haley, and welcome to Who's in My Bathroom, delivered by Copa.
And I wanted us to be able to have, like, real conversations, be able to talk about our passions and our businesses and things that we love, and get silly and drink tequila and, like, get a little tipsy.
Oh, thank you for having me. Welcome to my bathroom. Oh my God, it's just like mine.
All while doing that, on the other side of things, we were weaving in conversations early on about skincare, about beauty, about, you know, we were like using Rode on camera before people even knew Rode was Rode.
Let's pause 1 sec. Let's cut for a moment.
Oh, yeah.
You are the founding partner of Rode as well. What came first? The idea for the bathroom show or the skincare line?
One didn't lead to the other. I think my outlook as an entrepreneur is the worlds of content and commerce are blending. Truly, they're married. Pairing with a production company, and a production company that's going to let you lead and let you control the IP, whether it's merch, whether it's, you know, skincare, whatever it is really exciting.
Okay, well, welcome to the show. Thank you for being here. We're gonna make our grilled cheeses and we're gonna have a chat. Okay, let's do it.
You know, I built OBB when I was 26 years old, and she was then like 22, finishing up a Bare Minerals contract, and she was like, who can I turn to that will build with me? And definitely an unconventional choice was somebody who started a media company. And you're like, at some points, are we in over our head? You know, maybe I should have went with a more traditional, like, founding partner, or maybe do I know what I'm doing? And of course that fear creeps in.
You've become the go-to director-producer for celebrity shows like Kevin Hart, Shaq, Justin and Haley, scaling content that has racked up billions of views. Is there a changing of the guard in terms of how people are reaching their audiences these days?
I think at the level of fame that a Justin or a Haley or some of these stars have, it's sometimes really nerve-wracking to go and do content that you can't control, because everything could get manipulated. It's like doing an interview. Could we go and create a safe space where she can go and engage with the community, and most importantly, a skincare community? That's what she really wanted to talk about.
So you're working directly with brands and kind of cutting out the ad man. Is that a threat?
Yeah, to them.
Yeah.
The audience is getting so damn smart. Do not take the audience for granted. The idea of a commercial or forcing a product or demanding they buy something, I think, is a bit archaic. And I think the old ad agency model is dying a little bit. Technology is truly allowing creators to connect directly to their audience. I frequently look to some of our big talent and I think, oh my Lord, you know, if you added up like 5, 6 of them, it's like 1/8 of the planet in followers. So the question always used to be, great idea, packaged, how are we distributing it? The answer is with them.
News breaks. No one covers the world like Bloomberg.
The image of Vladimir Putin as the all-powerful leader has been rattled already.
History was made here at the federal courthouse in Miami when Donald Trump became the first ever former president to ever be arraigned on federal charges.
We're going to need a new engine technology, and that's where the real battle lies. And whoever makes that decision first is going to have a huge impact on this industry.
Bloomberg, your global business authority.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders.
Watch Wednesdays on Bloomberg Television.
A quick look on Haley's social accounts and you'll see nods to her skincare line, Rode. Haley launched the company in 2022, catching the tail end of a wave of celebrity brands that have saturated the beauty market, which raised $1.2 billion in venture capital funding at its peak. For these founders, fame is a double-edged sword. It's easier to launch a brand when you already have so many eyes on you. But what happens when gossip and drama come for you and your company?
There's a lot of folks who think celebrities don't get into the details of their brands. Like, what are you doing here on a day-to-day basis?
Everything that you could imagine that has to do with the creative direction of the entire brand is like, that's my job here. And also the formulation is also the other thing that I'm the most involved in. So testing the products, talking about what I want to be the next product, figuring out our timeline and the pipeline. And for me, the biggest and most important thing about the brand, and the two biggest things actually, are the aesthetic and what it makes you feel, and then the actual product itself that you're using. I wanted it to be so effective.
So are you and Justin like digging into spreadsheets late at night?
Him, not so much, but maybe me a little bit more. He's definitely also, I run things by him all the time, and he gives his input, and I appreciate that for sure.
Before you started a company, what was your impression of Silicon Valley and what it takes to be a founder?
Honestly, I didn't really know. I don't really feel like you know what it takes and what it's like and how it is until you're actually in the process. So I kind of just always went into it asking 1,000,001 questions, but I feel like I'm a fast learner and I really love to absorb information. So that was kind of my biggest thing from the beginning.
Elon Musk has said starting a company is like staring into the abyss and eating glass. How did it feel for you?
I think anything that you take a leap of faith with is scary. And I think that you never really know how it's going to be received until it's out there in the world, and that's a huge risk to take.
Yeah. So no eating glass moments. I mean, starting a company is
that's
hard.
like a very broad thing, eating glass. I mean, it's definitely, I get there's pains to it. There's a lot of growing pains. There's a lot of learning pains.
What kind of market research did you do? Like, did you try everything from Walgreens to Chanel? And where did you see something missing?
I remember always loving going in my mom's bathroom and trying all her stuff and her creams and her makeup. My grandma, she always loved creams and skincare. She had this crazy obsession with it my whole life. That always kind of stuck with me. And when the pandemic hit, I was like, all right, this is the time that I really want to nail down what it is I want to do. And I started with exactly what you're talking about, which was trying everything. And I would literally get deliveries of hordes of skincare and beauty stuff. And I was just trying everything, what works, what doesn't, what's popular, what's not. And that kind of really helped me hone down, which was already my philosophy, that less is more.
Who are your beauty business role models?
I think there's a lot of people that have gone and done this before me. I think I have a lot of people in my life and friends of mine that have even developed their own brands and businesses that I'm just so impressed by. And I think what's nice about that is there's people to be able to run things by and have those conversations with. And to be honest, I admire any woman who takes the leap of faith to launch their own business.
Initially, there was a super long waiting list.
Yeah.
Was scarcity part of the plan or part of the strategy? People want what they can't have, or?
No, I almost wish that it was, because then maybe that would be a better explanation for why. But it was honestly, we did as much demand planning as we could for what we were projecting was going to be the feedback and the popularity, but it just completely far exceeded everyone's planning and expectations.
So let's talk about the growth plan, because you are expanding globally. What's the ambition there? Where do you want to be? What about new products?
With Canada, that was what we felt like was the next best territory to enter into, not only because it is basically the neighbor to the US, but also because my husband's Canadian. So I really felt like Canada needed to go next. And then our plan is to then go into the UK. And we're kind of just taking it one place at a time. Obviously, I want it to be everywhere possible.
I know you're funding most of this with your own money.
Yeah.
Are you planning to take on new investment or raise new funding?
I think if the time comes where that makes sense and it's necessary, then I will and I would. But for right now, it has not been the case and it hasn't been needed. So we're just trying to take it slow. I mean, my goal is to retain as much of the company as I possibly can as we expand and as we grow.
How are you thinking about an exit strategy? Like long term, do you want to go public? Do you want to sell a big stake like Kylie Jenner?
I mean, of course, I have my goals for the brand. I have goals that we want to reach. I think that it's important to have those goals, but I'm just I just think it's not even really at the forefront of my mind. It's kind of looming in the background of yes, eventually. I think that's probably the goal, but I just don't even know what that looks like yet.
There are a lot of celebrity beauty brands out there. Some people think it's almost a cliche.
Yeah.
Like, what's going to make yours stand out?
One of my biggest things that I noticed with being a consumer of skincare and beauty was like if I went on a website and it felt like I don't even know what to choose at this point. Our approach is just always going to be that one of everything good. Yeah, just these curated, edited essentials, and that's why our drops are always very much one at a time.
There have been a number of celebrity beauty brands that haven't worked out.
Yeah.
And I wonder if you know, just being connected to a famous face isn't enough. And that's like, this is from the point of view of consumers.
Yeah.
Do you worry at all that you missed the wave?
Like the wave of?
The wave of celebrity beauty brands when the economy was going well and people felt like they had a lot of disposable income to try new things.
I don't feel like that's the case. I do feel like people had a fatigue of celebrity beauty brands. That's a tongue twister. I do feel like there was a fatigue. I felt like when I announced the brand, of course, there was people that were like, oh, here we go. Here's another one. And I'm like, I get that. I understand. I'm also coming from the point of view where I'm like, trust me, I know, but this is my approach and it is different to other people. And my goal from the beginning was that this brand, if you took me out of it, would stand on its own, regardless of me.
The internet's always talking. There's people think you might be expanding into clothes. Is that for real? You trademarked mood
I
board.
did trademark
What's
mood
happening
board.
there?
I did trademark that for clothes because I just kind of, I like the idea that this word mood board, like I'm such a big person that likes to mood board things. That's kind of how I mood board my hair and makeup inspiration, and I mood board inspiration for the road campaign shoots. I mood board inspiration for my fashion. It may never come to life. It may be for something else, who knows, but I just kind of wanted to, I had that name in my mind for a long time.
So we'll stay tuned, maybe.
Stay tuned. Perhaps mood board will come to see the light of day.
Okay. Your fashion and makeup tips can either spark like the next big beauty trend or you get some serious backlash. And I'm curious if you're ever surprised how the world reacts.
It comes with the territory. I think that it obviously makes me sad because I feel very misunderstood and I feel like there's nothing you can do to try to get people to understand you and know you. But I think that the bad side and the negative side of the internet doesn't outweigh the good side and the positive side.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
How does it feel to be someone that so many people have opinions about?
I think it can be hard sometimes, but I also think that you can't expect to exist in this place and not have that. So I think sometimes it's just a harsh reality check for me. I also think it boils down to, having to learn how to navigate it and be able to shut all of that stuff out. And for me, it's like the internet is not real life to me. Like my real life with the people that I love is my real life. And sometimes it's hard to just stay there and stay focused on that when things online can feel loud and disruptive. I don't think there's anything in the world that can prepare someone to step into such a broad amount of scrutiny and being talked about, and it kind of just like really puts you under a crazy magnifying glass, and I had just never experienced that before.
Yeah.
So
I feel like I've seen you leaning into it a little more, or almost accepting it a little more, like the nepotism thing. You stepped out in a Nepo Baby t-shirt.
Yeah.
Explain that.
The Nepo Baby t-shirt was just meant to be my little comment on the whole discourse that had been going around. And, you know, my point to having worn the t-shirt was not to poke fun at it or kind of be like, yeah, I'm a Nepo baby and ha-ha type of a thing. It was more so to be like, this is what everyone is saying, and I want you to know that this is my way of responding to it and my way of acknowledging it in a way that is so overly literal that it's like, I'm just gonna call myself a Nepo baby because I am one, and I embrace that I am. But I thought what was funny about that is like, to me, the way the internet is like, nothing's ever enough. So it's like, I do that, and it's like half of people find it funny and they get the humor behind it and they got it, and then half the people are like, well, you're not even really a Nepo baby like that much. And I'm like, so you're gonna sit there and call me a Nepo baby all day long, but then I acknowledge it and then I'm not enough of a Nepo baby. So it's like, there is never any like winning with the internet. And that's what I've always, time and time again, realized.
I'm probably too old to understand why this is an issue, but here we go. There's some ongoing drama between you, another celebrity, and Eyebrows. And you reached out to her saying you've been getting death threats, and she told her fans to stop.
I don't think that this is about me, Hailey Bieber, and Selena Gomez. This is not about this pitting between two women and division between two women. It's about the vile, disgusting hatred that can come from completely made up and twisted and perpetuated narratives that can be really dangerous. And I think that it's an opportunity to really stand for bringing people together and not being okay with the kind of division that it caused, because I'm not okay with the kind of division that it caused. I don't like this whole idea of team this person and team this person. I'm just not about that. I want to be able to bring people together, and I think that that was a really important moment for people to see that you can do that and you can bring people together, and it doesn't have to be about this divisive nature.
It's such a frustrating old narrative, like two women being pitted against each other over a man.
Because of a guy? It's awful. I hate it. I've hated it since the beginning, and I think that kind of goes back to a little bit of just being misunderstood when it's like, time and time again, I don't know why I keep having to say, and we keep having to say, that there is no issue and there is no problem. It's so disappointing that people still behave this way because of over a man. It's the world we live in, unfortunately.
Backlash can be so swift and fierce and relentless, and now you've got this business, right? Like, how do you think about that? And how, when public opinion sways, what does it mean for the brand? What does it mean for the business?
My head goes there because this brand is so important to me, and of course I don't want silly made-up drama to affect what I'm focused and working on. And I think at the end of the day, you kind of just have to keep it pushing and just keep moving forward. It doesn't mean that the work falls to the side because of noise and because things are being said, because there's always going to be noise and there's always going to be things that are said. And if it's not that, it's going to be something else. So it's kind of about just knowing just how to navigate it as it comes, because it wasn't the first time and it won't be the last time.
What's the biggest lesson you've learned from starting a business?
The biggest lesson I've learned is that there's going to be mishaps and mistakes. And the problem for me is that I'm a perfectionist. So when issues come up or problems arise or there's hiccups, I'm like, how do we stop it and fix it? And it's like, it actually is just part of the learning process. And sometimes the learning is really hard, especially if you're like a perfectionist, people pleaser.
People pleaser. I feel like I hear a lot of women say that a lot. Do you feel like that's one of your flaws or just part of your character?
I think it's something that I struggle with, yeah, for sure. I don't necessarily think it's a flaw. The base of where I think that comes from is I just care so much. I care so deeply about people. I care about my, I'm a people pleaser with my friends, with every aspect of my life.
With everything that you're doing, and there's so much more than road, the YouTube shows, the, you know, the fashion and makeup tips. Are we seeing you try to separate the Haley from the Bieber and the Baldwin at all?
It's hard to say that you can separate it because it's like, this is my life. That is the family I come from, and that is my husband. There is no denying that, and I don't want to try to run away from that. I'd like to just embrace that. So I think there's a space that within all of that for people to understand, take any last name out of it, like who exactly is Haley? And I think my journey with the YouTube channel and kind of the vlog style videos I put out is really just for people to be able to connect to who Haley is without the last names, without the headlines, without the gossip, without all that other stuff, and just form their own connection to me personally, as much as that's possible through social media.
So 10 years from now, what do you want people to be talking about?
I know what I don't want them to be talking about anymore. I always want Road to be a reflection of my life and where I'm at and what's going on with me in that time. So I feel like if I see that being motherhood in a different space, then I feel like the brand in some ways will definitely reflect that as well.
Well, you are multi-platform in a multimedia world.
Yeah, and it continues, and it's been really fun. There's nothing better than being able to kind of really have ownership over your own platform and it be this machine that's kind of funneling all things in one space.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point! From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Bloomberg UK, your source for news and analysis analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome to the best of Bloomberg Invest 2023. I'm Shanali Basak. The hunt for opportunity is a daunting challenge given fears about a recession and historic volatility. Bloomberg's annual Invest Conference brought together the biggest names in finance, economics, and investing to discuss strategies around those challenges. Those discussions focused on three main themes: debates over hard, soft, or no landing, the next investment opportunities, and the promise of AI. But let's start with where the markets are now and whether the Fed has control over this economy. I spoke with legendary investor and noted bear, Stanley Druckenmiller, about that and more.
There's a 500-year history of asset bubbles, well documented in a book that you had some issues with, The Price of Time. And basically, it documents, and I had already known this about the last 100 years, but it's going on for 500 years. Every time you've had a significant asset bubble, economic trouble lay ahead. But yeah, when you had 11 years of free money, people do stupid things. All you have to do is look it up there. Probably the stupidest is somebody paid $80 billion for Dogecoin, which was invented as a joke. I mean, that can only happen in the world of free money. It also suppressed people worrying about the kind of stuff I just talked about 2 or 3 minutes ago because you keep rates at zero. But the fact that this was arguably the most disruptive economic period we've had since the late 1800s, and there were no bankruptcies, apparently they've started in the last few weeks, tells me there's a lot of stuff under the hood when you go from this kind of environment, the biggest, broadest asset bubble ever, and then you jack rates up 500 basis points in a year. I think the probabilities would suggest that Silicon Valley banks, Bed Bath & Beyond, they're probably the tip of the iceberg. Nothing's a guarantee. I've been wrong a lot. I've been right a few times. But yeah, our central case is there's more shoes to drop, particularly in addition to the asset markets economically.
What are you most worried about? We'll definitely get to the opportunities and the fat pitches that you see on the horizon, but before we even get there, what starts to sink?
I could see corporate profits down 20 to 30%. Normally, I would say 40 or 50 in a hard landing, but this recession is so anticipated. I don't think a lot of corporations are going to be caught with their pants down, which is how normally you lose a lot of money is you're not prepared for something that happens. Commercial real estate, you know, I'm not informing anybody in this room of something I don't know, but office is a problem. It would have been a problem anyway, but change of lifestyle and COVID makes it an even bigger problem. Financing rates going up make it a problem. I'm worried about credit tightening the next 6 to 9 months. Obviously, the banks are going into an economic period that if, in fact, we get a recession, their balance sheets are already impaired, not from where they usually lose money, which is loans, from the fact that the Fed convinced them that they're going to keep rates to zero until 24. So they bought a bunch of treasuries yielding 1 or 2%, and now they're carrying them at 5. So their balance sheets are impaired. But if we get in a recession, then the real losses comes, which is stuff like credit cards, commercial real estate, that kind of stuff. So those would be my worries.
You just think about the everyday needs of people, how they are filling up their gas tank, the price of food, the cost of clothes, whatever that is, that impacts their overall financial picture. And so when you hear stubborn inflation, inflation is still high, we're already seeing the impact on the average consumer. To have people go into their retirement plan and reduce their contribution because they're making an impossible trade-off is a concern. And when you think about what does that mean, that means they're taking income that they're going to get taxed on. So that dollar is not a full dollar. and they're losing the compounding value over decades. So the real question for us is when people are making those tough choices today, specifically in a high inflationary environment, how do we make sure that as we're navigating through this cycle, that they can get back on track? So it's not just about the here and the now and the decision that an average American is making today. It is also about what do we do to help that average American get back on track to make sure that they can make better investment choices through the long term in order to make sure that they can have a secure retirement.
Look back at 2021, say July 2021, you had high yield, IPOs, and private credit, or credit, not private credit, at about 8.5% of GDP. Today, April was about 1.3% of GDP. So what's happened is you have a much tighter, capital market. That just makes it tougher to do deals. Having said that, the private credit market is very strong right now, and people like KKR and others that have a large private credit business, we're able to fill the gap and do things. Secondly, we bought several companies that we just did all equity, and we'll finance later when rates come down, and we've got plenty of equity capital. We'll buy them with equity. And so what you're going to see, I think, is a sustained period of time where the capital markets will stay tighter. It is not, to date, a credit issue. Could become a credit issue, but it's not there yet. It's more of a liquidity issue right now as to why you're not seeing as many private equity deals done.
We are at the beginning of a very classic late big cycle debt crisis, when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers. What's happening now, as we have to sell all this debt, is we then do have enough buyers. There are changes now in terms of the quantities in the world that are being held by large investors around the world that have lost money in these treasury bonds and so on. And then there are geopolitical changes which are having an effect. Some cases, some countries are worried about sanctions, and then there's this geopolitical shift. So when I look at the supply-demand issue, there's a supply-demand issue for that debt. There's a lot of debt. It has to be bought, has to have a high enough interest rate. So a crisis, that's, if we continue down this path in terms of what's likely over the next, 5 and 10 years, then you reach the point that balancing act becomes very difficult.
I think that people have been cautious for a long time. It kind of comes out of the COVID mindset, and you could see a lot of fear in the market. We had Ukraine, we have inflation, we have all sorts of senior loan officers starting to slow down on lending, and you can kind of see these problems. But at the same time, then you see this jobs number, and it's very strong, and you see signs of life. And so I think people are tired of being defensively positioned, and probably have felt some temptation, especially with this AI boom, to say, look, maybe we have to move out of T-bills back into risk. And I think T-bills are so attractive, because wouldn't it be beautiful to stay conservatively invested if you had to be long with that dry powder, if you're not in a tail fund, to sell those T-bills and move in when there has been a real reckoning. I feel like the market is tired of being bearish, and so to have now, looking at just the front month VIX, for example, the fear gauge, to have that now at its lowest point since a month into COVID, or sorry, 6 months into COVID. So almost 3 years now, the lowest point seems kind of wild when you think about all the uncertainty that's in the market. And so I think this is a time to be cautious, because the pricing, leaving aside some AI stuff that can keep going, the pricing is not there, and we should continue to be cautious, even if that's a little bit boring.
If you want to paint a more cautious picture, you would say we might have a mini stagflationary scenario. It might not be massive stagflation, but if you have sluggish growth, 1% plus minus growth, and inflation doesn't really get down below 3%, and rates have to stay 3+% for a while, that's not going to feel, it's not going to be called a recession, it's not going to feel great, and activity levels will be more challenged. That's the scenario we kind of plan for and worry about, because that's a scenario that could persist for a while, where you just get sluggish growth. I think we need better growth, we need more productivity, and there are impulses that could provide that. I think, I'm sure you'll want to talk about AI. Generative AI is a potential positive productivity boom. I think a lot of what's going on in science, life sciences, and the investment and the progress that's being made, there's plenty of innovation that we could point to and say there's an enormous opportunity to have like another industrial revolution. It just might be more of a digital revolution and a science revolution. That could unleash a lot of productivity, but we need something to get more growth in the economy that will allow us to deal with some of the challenges we're going to face.
Coming up, artificial intelligence and what it means for the future of investing. This is Bloomberg.
The top names in business are on Bloomberg.
For Indigo, this is a 500 planes order. That's the biggest order ever in terms of number of planes. It doesn't change the short-term perspective on ramping up the production.
All our aircraft deliveries are delayed. The supply chain that was really decimated during COVID.
It's a real challenge for all the OEMs at the moment, but we absolutely have to have those aircraft delivered on time.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg.
Ever since OpenAI rolled out ChatGPT in late 2022, the world has become transfixed with what AI can do. The same is true for investors. Everyone who spoke during the Bloomberg Invest conference had something to say about AI, including NASDAQ CEO Adena Friedman.
We have been leveraging AI within NASDAQ. Verafin has been using it for several years. And there it's really kind of advanced algorithms, self-learning algorithms, getting smarter and smarter and identifying patterns of behavior. And so we're able to learn from them as to how they've been able to integrate that into their product suite and into their product development suite to make it so it's more effective. At NASDAQ, we actually are asking the SEC to approve our first AI-driven order type within NASDAQ. And a big part of that is we have billions and billions of messages that flow through our systems every day. About anywhere from, I would say, 60 to 80 billion messages a day. So we have a big data pool. And what we're trying to do is structure order types that give institutional investors better fill rates. So we have a certain kind of order type called a midpoint extended life order, a little technical, but there's a timer on the order. It actually introduces latency to create a pool of liquidity that's kind of segmented within the market. And what we're trying to do is see what is the optimal timer on that order that maximizes the fill rate at that stock-by-stock level. And we evaluate about 175 different characteristics of the market to try to identify what is the right timer, each stock by stock, and it updates every 30 seconds.
AI has been having an impact for decades, and this stuff isn't brand new. The applications that you're seeing today have been in the works for quite some time, and in various applications, you've been interacting with essentially language models. You've been interacting with deep learning. You've been interacting with all sorts of AI approaches. So what's really changed is that the awareness has occurred. There have been some recent advances that have been created by scale-ups, creating ever larger models, which have displayed properties and behaviors that are very interesting, unexpected in some cases. I think everyone in the research world, everyone is pretty surprised at the behaviors that are emerging from large language models. That's actually really, really interesting. Some people have claimed it's sentient, and then when they say that, they get into trouble. I certainly don't think that it's sentient. But I could talk a lot about this, but I'll pause. But the one thing that I wanted to, it's almost like a joke. When I was at the AI lab at MIT, back in the 80s, late 80s, the joke was whenever AI, the definition of AI that we used was something that you could not achieve in a computer. So anytime that you actually got a program to do it, and everyone would say, that's not AI, it's just a piece of software. And so that actually, it's not really a joke. When I look at many of these things today, I say, okay, it's really cool, it's unbelievably impressive, it's very useful, but this has just been a progression. You could say that about computers in general.
It's just more software. That's how I would see it.
Just
And
more
we've been
software.
bringing more software into finance for a really long time. And there's been all kinds of breakthroughs and there's been all kinds of problems. It is statistical pattern matching. It's extremely powerful and it's interesting. But I do not see AI achieving what some would call the Holy Grail. Everybody wants to know, what's the S&P going to be in 6 months?
Can you tell me?
And I can't,
Okay.
and neither can the AIs. And at the risk of getting too technical, there's a really profound technical reason why the AIs, I think, are not going to do that, predict the stock market. The successes that we've seen in AI, and they are amazing, they are brilliant, all come from one profound realization, which is if you can take a large number of samples and you can dichotomize it and say, these are pictures of cats and these are not pictures of cats. And it turns out the internet was great for that because people love putting pictures of their cats on the internet and they say, this is my cat.
Yeah.
So now you've got this labeled data set.
Yeah.
Well, we've gone to town on that. You can train up an AI and it can say, you give it a new image it hasn't seen before and it'll tell you whether there's a cat or not. And then it'll tell you all the variations. It will tell you this cat is 10 years old and it's this breed and it might be sick with this kind of disease. It's just gotten better and better at that. But that is because the concept of a cat is stable in time.
Cats aren't evolving.
Well, they evolve, but
Right.
very slowly in evolutionary time, not from today to tomorrow. The stock market is notoriously not a stable distribution.
A lot of these bots or autonomous agents in the AI sphere, they're going to need to go get things done in the world, right? People are already using them to sort of say, hey, order my groceries, or maybe build this website and spin up this server. And so they're going to need financial money. They're going to need money to go do things in the world, these AI agents. And so I think that actually in the future, you're probably going to see a lot of crypto transaction happening between AI agents or AI and various businesses around the world, because crypto is kind of the native money of the internet. The internet is global, it's decentralized, every country, everybody in the world can participate in it. And so it wouldn't really make sense to use the dollar or the euro in a truly global context if you want to be country agnostic. So I think AI will use crypto more.
It is clear that we're at the beginning of a mega cycle in spending in AI. And the real beneficiaries obviously are the applications, so your SaaS companies, and infrastructure, so it's cloud and your high performing chip companies. Those stocks right now are extrapolating pretty enormous compounding growth. We wouldn't necessarily chase that, but to your point, what's really striking about where we are right now is AI allows us to talk to computers like ourselves, and the ability to tap into massive compute power, and probably even more importantly, enterprise data and just global data generally is going to be seismic, and the capabilities are just going to be exponential.
Coming up, how are Nuveen, Citigroup, and Ares competing for the next generation of wealth?
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus. And Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the best of Bloomberg Invest 2023. I'm Shonali Basak. As millennials and Gen Z come of age, they are investing differently than their parents are. Nuveen CIO Sarah Malik, Citi Private Wealth Global Head Ida Liu, and Ares Global Head of Wealth Management Raj Danda spoke on how financial institutions are pursuing the next generation of wealth builders.
Over the next number of years, we're going to see one of the largest wealth transfers from wealth builders to wealth inheritors. Trillions of dollars are going to change hands. This has a lot to do with how financial advisors are thinking about helping people manage their money. Two areas that are important are building bonds early and trust. So our surveys show that wealth inheritors will stick with a financial advisor if they feel like they trust them. And then for financial advisors, it has to do with building bonds early with those wealth inheritors. Our studies also show that if a FA gets to know a wealth inheritor when they're in their teen years, there's about an 85% chance that inheritor will stick with the FA. And if a financial advisor gets to know them as an adult or young adult, that percentage of keeping that FA drops to about half.
The investment solutions that are available today in the private markets have really changed the landscape. You have opportunities to build a core allocation through open-ended strategies. You can be opportunistic through some of the traditional drawdown funds. And all of that actually really helps the next generation have a lasting, durable allocation to the private markets, which wasn't really possible in the prior generations when the lack of alternatives in the private markets led you to focus principally on a stock and bond allocation.
I believe in the future that we're not going to be talking about ESG or impact investing as a separate class. It's not going to be a separate product. It's just going to be part of the core portfolio. Because the conversations that we're having with our investors around the world, particularly pronounced with the women clients and with the next gen clients and millennial clients, is they care deeply about doing good with the investment dollars. And the important fact is that they don't have to give up or compromise on returns to do good.
If somebody says this is generational, are you talking about what? Finance. It means that you're glorifying ignorance. You can't glorify ignorance with random events, with processes, where to the contrary, you got to glorify experience. So that cult of the youth that we have today, of course, is getting busted in finance, and soon the kids will no longer be interested in crypto. They'll be interested in some vegetarian diets or something else.
One future opportunity that several Bloomberg Invest speakers have agreed on is that women's sports has room to grow, and there's plenty of reason to believe that it will.
I think women's sports overall, huge momentum. We're going to get a huge lift off the Women's World Cup soccer this year. We're going to get a huge lift off the Olympics next year. The USA women's national team is going for their 8th consecutive gold medal there in Paris next year. It will be an all-time record in the history of team sports in the Olympics. And guess what? None of you probably know about it, right? Yeah, we have to market around this. We have to capitalize on it. But I think there's never been a better time to invest in this growth story. We are a sports, media, and entertainment property that is growing.
Sometimes when an offer is given to us, we're just so grateful that an offer is given to us, that even if they give us a bare minimum, we're like, oh great, someone wants to talk to me kind of mentality, and that needs to change. We need to look at what is given to the men. We need to look at what is the fair price for it and fight for what we're worth, and also ask the question of, is there an equity play? Can I take ownership in it? And I think just a change in that mentality with younger athletes will go a long way.
So I think the next big opportunity is in women's sports, right? Why? Because more and more people, if you see the women's NCAA tournament, you had more people watching that, right? NCAA women's final, the tickets went for more than the men's final, right? So you didn't know that, did you? All right. The haters will say that's because there was only 20,000 seats in the women's, whereas the men had 60,000. But at the end of the day, those seats, people were paying more. And when I look at that, I sort of see that over the next, here's another question, right? And you guys, you'll just prove all my points, hopefully, since I don't know the answers, and I hope you're gonna do it the way I ask. So right now, I think it's like 95% of all sports on TV is, when you're watching it, it's male sports, right? It's football, basketball. All right. Do you think over the next 5 years that number goes up or down? Right, it's gonna go down. It should go down. You're gonna have more women's sports. You're gonna have different things. So if you believe that, that means you're gonna have more media rights for women's sports. And if you have more media rights, then the value of those franchises will go up. So I think today you can get involved in women's soccer. You can get involved in basketball. You can get involved in all these different sports. If you look at kids, they want to see other women play. Mm-hmm. So you're seeing that there's this tremendous amount of demand, and it'll sooner or later take over from the media rights.
That's all for the best of Bloomberg Invest. You can watch full interviews at Bloomberg.com and on the terminal. I'm Shonali Basak, and this is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to Bloomberg New Economy Gateway Africa, building a resilient, sustainable future. I'm Jennifer Zabasaja. Over the next half hour, we'll be showing you highlights from Bloomberg New Economy Gateway Africa, this year held for the first time in Marrakesh, Morocco. The forum was centered around 4 key areas: Pan-Africanism, clean energy, financing, and the future of the continent. The conversations were dynamic and engaging around these themes as Africa navigates the impact of a slowing global economy, rising food and energy prices, the tightening of financial conditions, and the growing risk of distress in the sovereign debt market. Here's our panels and speakers at Bloomberg New Economy Gateway Africa, building a resilient, sustainable future.
The African continent contributes to global GDP only 3.1%, 55 of us. Africa's contribution to global output and global trade is about 2%. If you consider a country like Singapore, whose contribution to global trade is at around 6%, 6.1%, clearly there's a deficit. And that deficit can be attributed to a number of factors: lack of industrial capacity, lack of economies of scale, smallness of national economies, market fragmentation, 42 currencies, not trading in a single African currency. So these are some of the constraints that have held back the productive capacity and competitiveness of our continent. In the wisdom of our heads of states, they have said this is not acceptable. We must do something about it. That is why 47 countries, as we speak, have ratified the agreement establishing the AfCFTA to establish a market of 1.3 billion people and to leverage on a combined GDP of 3.4 trillion United States dollars.
The testing of the rails that you're really laying, are there any immediate lessons you've learned from what has happened so far with, this trade we've seen, tea from Kenya coming to Ghana? Are there any lessons you've learned so far in terms of addressing the challenges?
Yes, some of the lessons we sort of knew already. For example, a big challenge of interconnectivity in Africa, big challenge of trade supporting infrastructure to enable goods and services to seamlessly transit through borders, the need for, which is an absolute priority, the need for digitization of customs systems, which we've done at law. So we have a legal instrument that says all 47 of us must apply the same harmonized rules for transit, trade facilitation, and customs systems, but there's no interoperability. And this lack of interoperability of customs systems continues to be a constraint. So we are now considering and working with partners, how do we introduce a digital system for customs in Africa? The other exciting lesson which we've learned is that payments is at the heart of enhancing and boosting intra-Africa trade.
I know one of the reasons you're here in Marrakesh and in Africa
because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. What will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, all the tech which is moving our world on from having to rely on dinosaur era fossil deposits of oil, coal, and gas to simply today's era of machines which make machines to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times. Those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
So Africa, in your words, has the best green hydrogen potential of any region in the world. Better than your home country, Australia? Better than Chile, for example? Better than the Gulf states like Saudi Arabia?
Yeah, I'm comfortable to say that. I'm absolutely putting that stake in the ground. And if it doesn't get developed, it's because of lack of maybe local leadership, but lack of global support.
There is a historical relationship that Africa has with the global world, where it's easier to take product rather than to invest, to create situations and models where it's not necessarily in the interests of Africa, and we have to change that. I think what I'm trying to do in my part of my period is asking for a major mindset change. If you have that investment and you can look at, if it is football, you look at Hakimi and you look at, the goalkeeper and the rest. We have the same in rugby. Mario Itoje today is playing for England and he's recognized as one of the best in that field. We need a mindset.
Well, why don't the Mario Itojes of the world or the Beast? Someday I hope someone calls me the Beast. Why don't both of them stay in Africa? What's preventing young athletes from finding a home in the sport, whether it's rugby, whether it's football, and of course, many African athletes go overseas for basketball and other U.S.-centric sports.
I think at the end of the day, it's all about money. The money that's invested is taken along. Like, unfortunately, like everything, the money that's invested, players and families and people have a choice as to how they see the next 10, 20, 30 years of their life, especially sports that you have a shorter lifespan. We need to get the global bodies, if it's my sport, rugby, if it's others, and they're all on their own missions, to invest more.
This is a good time to look at Africa because they are now implementing the African Continental Free Trade Area. And instead of investors having to look at 54 different economies, many of which are small and landlocked markets, with a combined market now of 1.3 billion people and $4.1 trillion, this is a great time to look at Africa and to see it as a continental market. I think linked to that is the fact that post-COVID or during COVID, what we saw was a breakdown in global supply chains. And Africa really offers an opportunity for people to shift out of manufacturing and adding value in other places to Africa's products, but to do it where it makes the most sense in terms of the availability of the resources, the availability of the labor market, and to be able to transfer the technologies and skills that are needed in order for Africans to be able to supply global markets with everything from vaccines to automobiles, name it, everything in between. And so this is a good time for those two reasons, AFCFTA and shifting global value chains, to look at Africa.
Coming up, more from Morocco, including Alfred Kelly, Visa Executive Chairman. This is Bloomberg.
you're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it is causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Welcome back to Bloomberg New Economy Gateway Africa, building a resilient, sustainable future. Here's more from our speakers and panels at the New Economy Gateway Forum here in Marrakesh.
You look at Africa and you say, wow, it's exciting, it's young, it's a country where we're going to have the first digital native generation coming up. The people who grew up in the digital world who are out there looking for jobs now, they're looking for places to live, they're looking to get credit in their first credit cards. It's also a marketplace that has finally started to make, and this was the very first session yesterday, and it was apropos that it was because infrastructure is so critical. So in 2009, only 9% of people in Africa had access to the internet. It's grown now to 40%. Yet, as much as that is fantastic growth, the average country in the world is at 62.5%. By 2025, 500 million people will be shopping on e-commerce. That's another sign of digital expansion. And one of the things we know from several sources, including the World Bank, Eric, that as you increase mobile penetration and financial access, that you boost GDP by as many as three points. And I think, therefore, there's lots and lots of opportunity here. So this is a time and place where I think the infrastructure has advanced. It still has ways to go, but it has advanced that it creates a good on-ramp for us. And we heard yesterday from the Secretary General of AFCFTA. I think that is a critically important platform.
So there's a technological inflection point and a diplomatic inflection point.
I think both are true, absolutely.
Let's talk about fintechs. There are thousands and thousands of fintechs here in Africa, but of course, unlike in the United States or Europe or perhaps Australia, they're not trying to disrupt the banking or payments establishment, because in many of these countries, there is no banking or payments establishment. In fact, even here in Morocco, one of the most developed countries on the continent, under half the adult population has a bank account. Is it fair to say that the dream here, Al, is to build a cashless, fully digital financial services industry that is, many times cheaper and more inclusive than the systems that we know in advanced economies?
This is a continent that is going to jump past one of the big evolutions in payments, which is actually physical cards. This is a market.
It's going to make the leapfrog moment.
It's going to leapfrog that. It's going to be a market where it's going to be mobile first as the entry ramp into the financial mainstream. And what's happening is a lot of the fintechs and the mobile operators, more so than even some of the financial institutions, are driving new capabilities that are in fact going to enable more digitization.
I think there's definitely a role for Africa to play to be instrumental in designing these systems of AI and machine learning in the future. So we need to be generating more AI and ML analysts and specialists because it's all about data and it's all about the algorithms at core, and the data or the outputs are only as good as the data that goes in, right? And so there's very easy for bias to enter the system. For example, I tried this morning. If I picked up my phone right now and Googled beautiful baby, try this. Google beautiful baby. You'll immediately get some pictures of some beautiful babies, but they don't look like me or many of the people on the sub-Saharan African continent, right? And so just one example of how bias can sneak into the system. So we must be thinking about training the future technologists in Africa, but also playing an instrumental role in designing the AI data sets of the future that will drive these new technologies.
I think the continent is facing a serious problem of brain drain. So, and this has got to do with a mindset of scarcity. We are blessed with human capital on the continent and abundant resources. So I believe there's a huge opportunity for young people like myself to come back to the continent to support the development and growth of the continent. I think we need to make it an attractive destination. I see that there are lots of, I'll give a few examples of what is happening on the continent. In my country, Ghana, just in 2017, we launched something called the Year of the Return, which was an opportunity not just for our brothers and sisters in the diaspora to come in and just see the beautiful things that the continent have to offer, but also to sit down and see how the continent's connection to the diaspora is very, very much important to support and build talent, to be able to meet the demand, you know, of growing opportunities here on the continent.
Andela, which was the first scaled code academy on the continent in Lagos, which then itself spurned dozens of YC Combinator and other companies. But I think what was interesting there is students that came out of that academy, who they were already tested in. So it wasn't the bottom, it was the middle, as Roberta said. They had to be tested in, not from schooling, but actually just capability. And once they came out of that academy, they were commanding salaries of up to $7,000 a month, which for a 24-year-old in Lagos was quite exceptional. And those were salaries on par with California. But I think what we saw was not that the students were incapable or the workforce wasn't there. What we saw then was the employers shocked that they would have to pay the same price. So I think it brings us to the other point, which is, you know, are we ready for Africa to become what it is? You know, and show the world that we deserve these salaries and the talent is there. I think there's almost a conundrum where we're growing the talent, they're commanding the salaries, and then global corporates are not expecting to pay that same level. They're looking to see this as a low-income workforce, and I think that needs to be challenged from the very start.
What is the most important thing for Africa to create jobs and be inclusive? I mean, is it energy, electricity, water? What is the most important infrastructure?
It's a combination of having the right resources at the right time. And I think time to market is a big issue. I mean, we have all this vision of what we need. We need to be able to deliver it as fast as possible.
Our roads, our transport infrastructure, our power infrastructure. We also need to really integrate climate elements into the entire ecosystem, not just the agriculture, but the resilient infrastructure. So you need infrastructure and it's all interconnected. Skills development, skills training, and we need to also invest in partnership infrastructure to get the continent to where it should be.
Investment in infrastructure is really key, and nothing else can accelerate intra-Africa trade and the economic growth without more than infrastructure.
More from the Bloomberg New Economy Forum coming up, including Strive Masaiwa, Econet Group founder and executive chairman.
Can you believe it's summer already? That means it's time for the Boston Pops Fireworks Spectacular. And Bloomberg will make sure you see all the fireworks, music, and special appearances by pop superstars and Vogue, chart-topping country duo Low Cash, and film, TV, and Broadway powerhouse Mandy Gonzalez. Plus the U.S. Army Field Band and the cast of the Broadway musical Ragtime. It all starts tonight at 8 p.m. Eastern right here on Bloomberg Television and Radio.
New York City.
In London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders.
Watch Wednesdays on Bloomberg Television.
Welcome back to Marrakesh and Bloomberg New Economy Gateway Africa, building a resilient, sustainable future. I'm Jennifer Zabasaja in Marrakesh. Throughout the forum, optimism for Africa's future was top of mind for our speakers, including Econet Group Executive Chairman Strive Masaiwa. I spoke with a telecom mogul about his company and how it's connecting the next generation of Africa.
We have boots on the ground in 31 African countries. Okay, only Coca-Cola can say more than that. Okay, we put people on the ground. We build in these countries, and you know, as long as we are welcome, as long as there's an enabling environment, we're a private company. We don't ask for government capital. We don't participate in government tenders. We build as a private company. So we don't take money from governments, we just build. If governments have sovereigns that want to invest, that's great. But this is all private. We laid all that fiber across this continent as a private company. Of course, we come into markets like Morocco here, where we didn't have to build anything, but we still partner with people like Morocco Telecom to see how we can integrate their network into our overall infrastructure. Because we want the whole of Africa to talk to each other. They've got to be connected. And I'm just Africa's plumber.
You're just?
I'm the plumber.
Come on.
You know, I'm just laying the pipes in the ground, you know, that's all I do.
I don't think anyone would refer to you as a plumber, but if you'll say that, then we'll take that. So Strive, how far off is this continent really from all being interconnected in the way that you really envisioned 30-something years ago?
Hey, you know, when I got into this industry, and I always, it's almost a cliche now, less than 1%. In fact, I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support. Because we are the best investment cases for this in the world.
And, you know, we are seeing a number of projects in addition to yourself. Of course, Elon Musk and Starlink are trying to do a lot of connectivity here on the continent. But when you talk about investment, where is the capital still needed? What are investors maybe not realizing where they should be channeling their money?
Look, throughout the whole value chain. So you've got players like us, obviously, in digital infrastructure. We also do digital services. Now, you know, whether you're talking about cloud, we do cybersecurity because we have to protect Africa's data. But now there is the opportunity around artificial intelligence. It's here, it's now. We're building for that too. So the whole value chain, for example, e-commerce probably hasn't taken off to the extent that it should have in Africa. We've got to sort out the payment systems so that the entrepreneurs can build proper e-commerce on the continent. So Africa is not exotic. It's not outside the world. It's part of the world.
The very important role of the private sector. And by the private sector, I mean domestic
as well as international private sector, international investors. We need to create the conducive environment to attract investors into our country. And there are a gamut of measures, a gamut of policies we've put in place which will attract investors. Rule of law, good governance, certainty, and consistency. You know, the sanctity of contracts, very important. Change of government should not change contracts, should not change contractual rights. Governments don't wake up overnight and change the rules in the middle of the game. When you go to the judiciary, you must have a fair hearing, you must have justice. All of these tenets of a democratic country are key to attract investment.
If we want even to close the skills gap, we've talked endlessly about innovation, our youth, but if we're not deliberate, as we are, you know, the minister is demonstrating really powerfully for Ghana, if you're not deliberate on policy on what you will do with certain minerals, or if we're not deliberate on policy on the skills gap we need to fill and what, you know, quotas can have negative effects sometimes, but if they're deliberate and well thought through, we saw in the oil and gas sector in Uganda, when we set those numbers, people started to go to the right universities, the right technical colleges. We built some, they got training, but it was always under the umbrella of strong policy and regulation that directed those efforts.
Today you have this idea of food security where every African country is trying to be self-sufficient on its own, for its own thing, as opposed to thinking of food security for the continent, and then sort of playing on the relative strengths of different countries to say, how do we become food secure as a continent? But that means things like free trade agreements that are being signed actually functioning. It means being able to go from point A to point B easily and seamlessly. I mean, as an African, it's harder for me to travel within Africa than it is for me to travel, you know, in Europe or in other parts of the world. We need to solve for those types of things, and then I would say there needs to be a Pan-African vision for agriculture.
And that's all from Bloomberg New Economy Gateway Africa, Building a Resilient, Sustainable Future. Complete interviews from the forum are available now at Bloomberg.com and on the terminal. I'm Jennifer Zabasaja, and this is Bloomberg.
What's happening on Wall Street?
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Welcome to the Qatar Economic Forum powered by Bloomberg. I'm Haslinda Amin. Over the next half hour, we'll be showing you highlights from the third annual forum that took place here in Doha. This year's event focused on the new global growth story, with global supply chains rerouting and the epicenter of global growth shifting to the east. We looked beyond the China, US, Europe headlines, drawing on Qatar's ability to link Asia with Africa and beyond. Let's begin with the recent financial turmoil, what it means for the global economy, and how the Gulf region's sovereign wealth funds have been competing to fill the $3 trillion liquidity gap. Bloomberg's Eric Shatska spoke with former U.S. Treasury Secretary Steve Mnuchin about that and more.
I think the Fed is either done or close to being done. I think the uncertainty is how long does it take at this point to slow down the economy. I think the Fed was slow to raise rates. I think they'll be slow to lower rates. I don't think they'll lower rates until they're clear that inflation is under control. It doesn't necessarily mean they have to wait for it to get back to 2%, but they have to, it's got to get a lot closer to the target. And my own opinion is that the markets are predicting too soon of a Fed easing. So I think the unpredictability is how long does it take?
Mr. Secretary, you know a thing or two about banking. As Secretary of the Treasury, you were one of the main regulators of the U.S. financial system, and long before you became Secretary during the great financial crisis, you bought a bank out of FDIC receivership, you renamed it, you ran it, and eventually you sold it. 4 banks in the United States have failed in the past 2.5 months, and several others are still in trouble. Having seen the industry from both perspectives, private and public, what lessons should we draw from those failures and what appears to be the fragility of the fractional reserve model?
Well, look, there's no question the U.S. bank failures were a result of, first, management failures, and second, regulator failures. So, you know, although there were liquidity issues, and that's always what drives banks, in this case, you had a very big mismatch between assets and liabilities. And when you run a bank, that's kind of banking 101. It's the Asset Liability Committee, known as ALCO, and you constantly look at interest rate risk. It's almost surprising to me that this wasn't picked up quicker. Look, I think fortunately, you know, the 3 major banks in the U.S. that failed didn't have an ongoing impact in the short term, but I think in the long term they will. And I think one of the issues we need to address is FDIC deposit insurance. I think it's way too low. I think I've said publicly it should be raised to $25 million. I don't think it should be raised to unlimited, but you have to have deposit insurance so that companies who have operating accounts know that their money's safe. And if we don't do that, we're going to end up with 5 or 6 big banks in the United States, and that's not it. So I'm very concerned about deposits leaving regional banks and mid-sized banks. And I think that will have a big long-term impact on the economy.
My view is that for a number of reasons, inflation is going to surprise on the upside, both in the United States and in Europe. Labor markets are very tight, unemployment rate at historical lows. There is aging of population, restriction to migration. In the US, collapse in labor force participation rate, the great resignation, and now there's the beginning of labor strife. So wage growth is excessive. There are geopolitical tensions in the world that are going to fragment the world. They may lead to further spikes in commodity prices. The Fed is not done yet. Even in June, we may have another hike, and certainly the ECB has much more work to do.
We do believe that inflation is the enemy of the economy, and the inflation is going to hurt the even household pockets. So inflation is in downward trajectory, but what we are seeing now is a sticky inflation, and it's going to decline at a slower rate, and it will take a long time in my forecast until it reaches the central bank's target level.
This story of de-dollarization has been with us for some time. The dollar has been going slightly down. It was 70% of reserves. Now it is slightly below 60% of reserves. Understandably, there are other currencies, the euro, Australian dollar, small country, strong currencies that are taking place. We don't expect, though, a rapid shift in reserves. Why? Because the reason the dollar is a reserve currency is the strength of the US economy and the depth of its capital markets. So don't kiss your dollars goodbye just yet.
You know, you need a mix of all energy sources, and people need to realize that you need this mix. You need oil, you need gas, you need renewables. People talk about renewables as if it's the fix-all. If you look at renewables, you can generate electricity from wind and solar, but you can't manufacture plastics and things that you have in this room that are all manufactured. Makeup for women, creams. There are a lot of things that go, you have oil and gas products that go into it from refining and so on. So you can't do away with it. Panels in your cars and so on. So renewables, as far as just saying generating electricity, does not solve the problem. You need a proper energy mix, and it can't be driven by just politics and politicians want to get into a seat to say this is the solution. It sells, you know, it's a nice pitch to say energy transition, but when you dig down and look at the reality, it's not achievable.
I think the speculators, like anything in any market, they are there to stay. I keep advising them that they will be ouching. They did ouch in April. I don't have to show my cards. I'm not a poker player, and I don't know how to play poker, but I got it from a movie somewhere. But I would just tell them, watch out.
My position is that looking at the reality, looking at the figures, looking at the surroundings, looking at the fact that NATO is not ready to send troops, it's obvious that there is no victory for poor Ukrainians on the battlefield. That's my position. That was always my suggestion to everybody, that instead of to manage to have a stronger involvement into the war, escalation should be stopped, and we should argue in favor of peace and negotiations.
I think he's entirely on the wrong side of what will be history in that regard. I think that Ukraine is going to show what can happen when you have well-trained, well-equipped, now with Western equipment, substantial additional forces that are well-led, taking on forces that have now been beaten up over 15 months of combat. They've been in the line continuously, the Russians. You know, Putin set out to make Russia great again. What he's really done is make NATO great again. You already have one additional member Finland, that's a very important addition. I had Finnish and Swedish troops under command in Afghanistan. They're very well equipped, well trained, highly professional. So that's very dramatic. And then the other irony is, of course, that no one has done more for Ukrainian nationalism. No Ukrainian nationalist political figure has done as much for Ukrainian nationalism as has Vladimir Putin.
Coming up, more from Doha, including Shou Chew, TikTok CEO. This is Bloomberg.
News breaks. No one covers the world like Bloomberg.
The image of Vladimir Putin as the all-powerful leader has been rattled already. History was made here at the federal courthouse in Miami when Donald Trump became the first ever former president to ever be arraigned on federal charges.
We're going to need a new engine technology, and that's where the real battle lies. And whoever makes that decision first is going to have a huge impact on this industry.
Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to the Qatar Economic Forum. On day one of the forum, Bloomberg's Caroline Hyde spoke with TikTok CEO Shou Chew. The social media giant had a lot to say about data, privacy, and the potential of a US ban. Take a look.
TikTok is not available in mainland China today. As we said many times, the Chinese government has actually never asked us for US user data, and we will not provide, even if asked. Now, beyond that, we have built, over the last 2 years, something we call internally Project Texas. And what it really is to ensure that American data is stored on American soil by an American company and overseen by American personnel. And this is truly an unprecedented project that none of the other companies in our industry have ever attempted.
What's so interesting is your industry is grappling with this issue at the moment. The fact that we're sort of almost getting a nationalization, a sovereignty argument for data. And we've just seen Meta, which I know the artist formerly known as Facebook, where you were once an intern, has just been issued a fine for keeping its data in Europe, or not, as the case may be. That's what's argued by the EU regulators. What do you make of this almost deglobalization that's occurring in technology?
I think this is a very important topic that you're touching on. Now, on the one hand, the internet is really built on this idea of global interoperability, and this idea that talent from around the world can connect very seamlessly with each other. And I think we've all seen the benefits of a very connected global internet over the last few decades, and I continue to be a big proponent of that. I think there's so many important elements of this global interoperability that needs to be preserved. Now, at the same time, there are conversations now in the EU, in the US, and in other countries around the world about what they call data sovereignty, making sure that there are certain elements of the data. Data is a very big term, so we need to make sure that we are very specific about what we are talking about. Certain elements of protected data, for example, are stored and handled in a particular way in each region. And that's something that I believe we are ahead of the curve, because Project Texas in the United States is really sort of a project that deals with digital sovereignty in the US. And because we have so much learning from that project, we started Project Clover, a very, very similar project for Europe, starting a few months ago now. And the idea is very similar. We are building our data centers in Ireland, in Norway, localizing the storage of data in Europe, building additional data access protocols, but adapted for GDPR, which is the regulation within the EU. And we believe that this is an important conversation, and we are slightly ahead of the curve. And I think that we need to simultaneously address the concerns about and the desire for digital sovereignty, while making sure that we don't break the internet, that we don't balkanize this, and we continue to enjoy the benefits of a seamlessly connected global internet.
And what you're saying is entrepreneurs today are bypassing, in many cases, your traditional venture and trying to come directly and raise money from sovereigns. Fascinating. Which means it raises the bar to private equity and to venture capital, that it's just more than just capital. And I am a big believer that just passive capital, deployment of capital, what happened the last 10 years, because if you're a venture capitalist in the last few years, you were selling access to a company. So people work hard, hey, let's see if the founder likes me in order for me to get access. I think that's gone. I think the real investors of the future are going to be investors that can actually change the trajectory of a business, that can help entrepreneurs operate, scale, exit, hire, through all those things. And if all you're looking is for a less active capital, more passive capital, you're going to find the great companies coming directly to the Middle East, be Qatar, be UAE, or be Saudi, because the teams that sovereigns are building are first class. And you have real talent coming and working for these sovereign funds, because most of the capital is coming from this part of the world today.
The conception of where we think we are in AI and where we actually are, we are in the AOL days of the internet in terms of where it can go. I think what you're seeing is not suddenly an evolution of AI in 1 month when ChatGPT came out. The user interface changed. And we all missed that. The user interface became WhatsApp. Who uses WhatsApp in the audience? That's why everybody can now suddenly use AI.
It's a combination of creativity of a writer, ability of the editor, which is ChatGPT, writer is us, and at the end, what we created through AI is a new form of human being. It's still human, but a new form of human being.
Is a little bit crypto's version of the great financial crisis. But it turns out when you don't have the Fed to backstop, it's going to be a lot more violent, right? There's no overnight window in crypto. You can't go put your illiquid assets somewhere and borrow liquid against it. You are totally on your own. And that means that really only the absolutely strongest players survive. So if you look at like the 12 most valuable companies in crypto a year and a half ago, there's only 4 of us left. And so only the absolute strongest survive. But I think for trying to build a system that is native to the internet, that is sort of beyond any one country, that is beyond any one central bank, it's actually really healthy for those firms that are not prepared to be resilient in that fashion to fail.
So far, there's no evidence that Twitter can capably raise a subscription platform. So it's nice that Tucker and Elon have announced that, but there's no evidence of it yet being successful. I do think that you will see niche subscription services, but they'll be pretty niche. Look, we owned for 6 or 7 years Crunchyroll, which is arguably the best niche subscription service. It's a Japanese anime subscription service, which we bought, is now up to, I think, about 4 or 5 million subscribers. For those subscribers, Japanese anime is life. They will do anything for it. I think there are a few things that are that critical. Could Tucker get to 4 or 5 million paid subscribers? I'm not sure. So I think the trade-off is you can certainly make a living if you're charging $10, $15 million among passionate users, but you certainly don't have anything near the reach that you used to have. And then you're making a trade-off, which is you're getting paid, you have less influence. As your influence wanes, do you still are still likely to get paid at that level? So I think it's an interesting trade-off for so-called celebrities.
More from the Qatar Economic Forum coming up, including Leti Tutui, VinFast CEO, on the future of EVs.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Welcome back to Doha and the Qatar Economic Forum powered by Bloomberg. I'm Haslinda Amin. The world is under pressure to achieve net zero by 2050, with a shift to electric vehicles expected to play a major role. I spoke with VinFast CEO Lati Tutui to find out how the EV maker is balancing market share, environmental impact, and clean energy goals.
I think the government and policy play a very important role in adoption of EVs. You look at some North European countries like Norway, like Sweden. The policy actually play an important role in converting most of the vehicles on the road into EVs. You see that in the U.S. as well with the policy. I think in Vietnam in particular, there's a new policy where that reduce the you call it special consumption tax in Vietnam for EV from 15% down to 3%. 3% versus 40% special consumption tax that you have to pay for a normal car. Give us advantage in pricing our vehicles to be at break even or making a profit so that we can sustain the business, for example. So that I think policies are very important. And it's also important for us to continue optimizing costs, bringing down the production, the BOM cost, applying more technology to bring the cost down, to make the vehicles more accessible to the mass market, not just to a few people.
I want to touch on the ecosystem because I know that Southeast Asia is trying to build an EV ecosystem. It's not just about Vietnam, which is producing cars. We have Thailand. We have Indonesia, which has the minerals for EVs, and of course Singapore pushing through the adoption of EVs within the country. How do you see this playing out?
I've been saying since end of last year that ASEAN is a great place to have an ecosystem for EVs, and VinFast is making a conscious effort in pushing for that in ASEAN. So I had a meeting with all the ASEAN ambassador in Vietnam last week on the size of the ASEAN summit, and we had a few conversations about it. Each of the players within ASEAN can have their roles in building this ecosystem for EV. Indonesia with the minerals, with battery investment in the battery industry, for example. We as an ASEAN only EV player, for example, with Malaysia, like you mentioned before, semiconductor business. Singapore leading ASEAN in terms of adopting EVs, not only like electric vehicles, but e-bus and other form of green energy for mobility as well. So I think together we can push forward to make ASEAN as to build an ecosystem for EV in ASEAN.
There is credibility in the discussion about reporting structure, reporting requirements, driving a level of cost that's really not sustainable. I separate that from technology that we have to invest in to decarbonize our supply chain and our world in the future. That's two separate things. I think we have to invest in the decarbonization. steps. If you believe that the world is going to kind of continue to boil, you have to do something. And I believe that. But what we're getting a little bit caught up in is, how precise, what do we count exactly? How precisely do we count it? Who's responsible for accounting it? Bob and I see each other a lot in boardrooms, and I'm on the board, audit committee of a board, and all I say is if they want me to sign on some of this decarbonization rhetoric, the same as I sign on my financials, it'll be very difficult for an audit committee to do that, right? Because the exactness, the precision is not quite there yet. So reporting one thing, actually decarbonizing the supply chain another. Spend the money to do that, and let's be really careful about just throwing, millions and millions and millions of dollars behind trying to get down to the last nanometer of emission.
The Chinese were prescient. They were early to go to Africa, realizing that they had to feed their people. They had to get the raw material they needed. Now we're seeing pushback where every nation is worried about its basic supply chain. The Japanese and the Koreans have historical animosities. They both want their own supply chain. The Americans want their own supply chain. The Chinese want their own supply chain. Europe is freaking out about events in Ukraine. They want their own supply chain. And this is a very serious issue, and we're all in trouble if we don't cool it. We need to really take a deep breath. And NVIDIA just talked about this with chips, for example. We have to take a deep breath and stop this downward spiral between China and the Western world, for example. We really need to remember that we got this far with an integrated world economy.
The consumer has been remarkably resilient. So we just talked through the last 3 years and everything that hit us. The consumer has made ends meet, and that plays out relatively similarly across each of the regions. So if we do a quick walk around the world, starting in the United States, solid performance throughout the last couple of years. More recently, some moderation, but still the consumer has remained resilient. You look into Europe, we were all very worried about Europe looking at the winter. The mild winter came about, and Europe continued to surprise. Quarter by quarter, the European consumer continues to spend. You come to the Middle East here, just walk outside. Walk through Doha, and the question is answered.
And that's all from the Qatar Economic Forum. Complete interviews from the forum are available at Bloomberg.com and the terminal. I'm Haslinda Amin. This is Bloomberg.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more, but...
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
that
it.
Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come. I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
It was really going to be my last try at this, you know. It was such an endeavor, and it was so much risk involved, and it was so personal that if I put my name on it, it would have to be really good.
In 1989, a 13-year-old with a denim jacket in Hollywood, California had an idea. Mike Amiri combined a love of his neighborhood's unique culture with a gift for creative problem solving and a vision for the future of luxury, creating the most explosive new fashion house of the 21st century. Fueled by twin obsessions with craftsmanship and continuous evolution, Amiri has grown his namesake from an assortment of 6 items to a global brand that generates $250 million in annual revenue. And it all started with one idea. How did your parents' professional life inform your professional ambitions?
Both of them immigrated here from Iran. And my dad, did everything from being a waiter to a bartender to joining the US Army. My mom kind of stayed home, took care of us. But there was never a moment of my dad not doing something. He had a laundry list of jobs, and he did every single thing. And I think that's one thing I kind of pulled from him, is the thought that you always have to be doing. Just don't be idle. My biggest early supporters are really my family and my friends. When you're starting out something and you're dreaming really big, you're gonna need to remove all voices of doubt from around you. Having all these people who just keep encouraging you along the way will make all the difference.
What gave you the confidence to pursue a career in a creative field?
Growing up, you're trying to figure out what your thing is and what your superpower is. I knew certain things that I was good at or more inclined at, and things that I was terrible with. But every time it kind of went across something creatively, or where imagination was involved, I felt I saw things that other people couldn't really see that easily.
You had your first swing at creating something in the fashion space when you were 13, augmenting a jacket with the Motley Crue t-shirt.
Yeah.
What was the inspiration to even sit down and try to do that?
Yeah.
And also, how did you figure out the process?
I grew up in Hollywood, and during that time in the 80s, Sunset Boulevard was a different place. I would always kind of see the kids out there and the way they dressed, and their jackets were patched up, or they'd be augmenting their own clothing and creating their own aesthetic, you know? So the first thing that I thought of doing was, yeah, let me grab a t-shirt, vintage one, Motley Crue, and like make a jacket out of that. And the simple way to do it was just kind of fit it into the seams perfectly into a Levi's trucker jacket, and couldn't sew, so I paid my friend like, you know, $20 to have his mom, told me his mom sewed, and she sewed it for like $20. That was like the first thing I made.
So you mentioned growing up in Hollywood. You know, when you think about being in LA in that era, in the mid-'80s, what are the sort of most lasting legacies of that experience on your personality and your creative output to this day?
Hollywood was an amazing place because you not only had like music, but you had like culture. So kids were like skateboarding, BMX, graffiti culture was like huge. And I was so young that things didn't really look raw to me. They looked like really beautiful. So I would walk down an alley in Melrose, and although it's like filthy, there'd be so much art by all the graffiti crews, and I would just be in awe of how beautiful the colors were.
You went to Beverly Hills High at a time where everyone from Angelina Jolie to Alchemist was attending. What was the creative energy like in that little microcosm?
Yeah, so there was like a time in my teenage years where my parents like wanted us to move out of Hollywood to kind of just put us in a better surrounding. So they moved into like a small apartment in Beverly Hills just to get us in the zip code. And it was a bit of like a culture shock. But there were a lot of like kind of creatives there and people that were really ambitious. Lots of people whose parents had done really big things. So they were like really big thinkers as well.
When you get to the end of high school, do you have any sense of what you want to do as a career or where you want to go with your life?
No, like towards the end of like high school, I was maybe bottom of the class, like worst student there. And it was more just because I was like just constantly distracted. You know, I had, still have ADD, and it always kind of kept my brain wandering. I'd always kind of seen it as like, oh, this guy needs extra time on tests or something like that, right? But later in life, I kind of like realized that's like a superpower in a way. It's like you're just ultra creative. Your brain is constantly going, and I eventually learned to embrace that. I do sometimes get creatively blocked when you're required to come up with so many things on such a rigorous schedule. It's natural for you to find yourself in places where you're not inspired. It's important to remember that the best ideas are usually effortless. So when things get blocked, I realize maybe I just need to step back a little bit and then reapproach it when I'm a bit more relaxed.
So you get to the end of senior year and you apply to go to college.
Yeah, so I went to Santa Monica College, and at home I was dabbling in music. I had bought like an MPC and an ASR-10, and I was really into like making beats and making music, composing.
What was the music you were listening to? Because obviously, based on the collection and also a lot of the interviews you've given, there's clearly a deep connection to sort of that 80s, you know, hair metal, LA rock scene.
Yeah.
But if you have an MPC or an ASR-10, I'm imagining you're listening to some hip hop as well.
Yeah, the funniest thing is like the entry into like rap music didn't start until I got to Beverly Hills, because all the kids in Beverly Hills were listening to like Cypress Hill. And I was really being exposed to like that, where everybody in Hollywood was listening to like rock and roll. I really started to, like diving into there and early Gangstar stuff, and started to get kind of obsessed with like the LA like rap movement. We had, you know, the Far Side and like Hieroglyphics and Dell. There was something about that I really loved, and that storytelling element, you know, to the whole thing. Mm-hmm. And then I just love like the creation process, like the sampling and cutting things up, and that was like something I was starting to be obsessed with. So yeah, so I started making music for a bit.
And so you're doing that while you're going to school. Did you have any real sort of sense of purpose or intent with the college part, or was that sort of just to placate your folks?
Yeah, I think like the college thing is like, you do what you think you're supposed to do. And just that seems like a logical thing, you know? But it wasn't like an obsession, and I knew I didn't like find my like thing, you know? I did kind of persevere and stick with that.
You ended up going to UCLA eventually?
Yeah. Ironically, like I was a really good student there. And
what was the switch?
I realized I can work harder than anyone in the class. I realized like I probably couldn't understand things like as well and as fast, but I knew that I could stay up later and study like longer than anybody. And I became really good at just obsessively trying to be like top of the class. From there, I went into law school.
Were you seriously thinking, this is what I want to do with my life?
There was never a flash like I was in the right place.
Okay.
I think like even being within like law school, I never had the feeling like I was in my element, you know? I just kind of like persevered through it, but like I was never at the point where I was like, oh yeah, I'm a fish in water.
Did you end up taking the bar and that
No,
stuff?
by the time I graduated, like I was already like obsessed with fashion.
But before that happens, you get more immersed in music. You end up, through a very strange twist of events, being a pioneer of K-pop and Korean rap music.
Yeah.
How does that happen?
It's pretty weird, right? One of my best friends at the time was Korean, and he was really into music, and he wrote music and he rapped, and English was his second language.
Okay.
So it was really difficult for him to rap in English, but he was still decent. At some point, the thought came to, you know, why don't you try doing this in Korean? So I started to kind of work with him and make the music with him a little bit. Eventually, it found like success in Korea. It was like so new for someone to bring like hip hop or rap in the genre when they were really into like techno. So it was completely kind of out of left field, but the timing was like really good where it was very, very fresh. So it kind of gave me the opportunity to make music with him, produce music, write music, sometimes perform music.
So after 5 years of, you know, pretty robust success, you decide to pivot and come back to the States. What inspired that decision?
I think at the end of the day, it's like when you're making music in a different country, and especially like within the Korean music industry, it's like a whole set of rules, and you can't really control any of those variables. And there was something about me not being able to kind of understand that industry and participate in there that just wasn't really fulfilling. Knowing when to pivot is really important. For me, the best ideas usually come from somewhere organic and natural. So when I move along, sometimes I have to ask myself, is this the original organic motivation, or am I chasing something? And the second I feel that I'm chasing and not moving naturally, I step back and I pivot.
The top names in business are on Bloomberg.
For Indigo, this is a 500 planes order. That's the biggest order ever in terms of number of planes. It doesn't change the short-term perspective on ramping up the production.
All our aircraft deliveries are delayed. The supply chain that was really decimated during COVID.
It's a real challenge for all the OEMs at the moment, but we absolutely have to have those aircraft delivered on time.
Nobody covers business like Bloomberg, your global business authority.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. You know, I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that, you know, peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it is causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Can you believe it's summer already? That means it's time for the Boston Pops Fireworks Spectacular. And Bloomberg will make sure you see all the fireworks, music, and special appearances by pop superstars and Vogue, chart-topping country duo Low Cash, and film, TV, and Broadway powerhouse Mandy Gonzalez. Plus the U.S. Army Field Band and the cast of the Broadway musical Ragtime. It all starts tonight at 8 p.m. Eastern right here on Bloomberg Television and Radio.
So you come back to LA, having enjoyed some success and sort of seen what achieving something in the creative field feels like. How do you pivot from there into getting involved in fashion?
You know, my entry into fashion was really just out of chance. I was hanging out with one of my buddies and he pulled out a jacket. And he's like, hey, I made this jacket. It was like a recycled, like military jacket, and, you know, a few patches, a few this and that. And he's like, I made a bunch. Do you want to try to do this with me? It's pretty fun. And we eventually, you know, did a brand together, a small brand, and it sold to a store in LA called H. Lorenzo. We didn't know anything about business or margins or manufacturing or production. You know, we just kind of knew how to make cool stuff. And I literally hung out at that store every single day. And that, in some ways, was my fashion education, because that store in particular bought tons of Japanese brands. You know?
Okay.
So they had, you know, Number 9, Mihara Yasuhiro, Julius, Diet Butcher, like all these amazing brands that are crafted incredibly. And I just used to just kind of look through and see how they would do their pockets or their sleeve lining or their proportions and all those things. And I started to kind of study in that way. And that really kind of was like my first education, mixing that with just kind of learning through trial and error.
And how are you supporting yourself during this period?
I was still like with my parents, like trying to make a little extra money. I worked at Guess. I worked at Brookstone. I had 2 jobs doing that. I had a telemarketing job at the same time. I kind of did everything I could to kind of keep doing that. It wasn't even like working to make it a big business. It was kind of working to do more of that. Eventually, like, I started picking up like freelance projects.
I was gonna say, how did you start to create that network where you start getting tapped to do freelance gigs?
This was like 15 plus years ago. The opportunities were really different and the landscape was really different. I was doing like trade shows in anywhere from like Vegas to Paris, where we'd show at Trenoy. And I'd go there and there'd be like 50 brands. And you have like a 10 by 10 booth and you're trying to explain your brand to stores internationally and, you know, those kind of things. And then you start getting to know people. And just that like process itself, you know, kind of put me in touch with more and more people. And at some point I was like the guy who knew how to make, you know, good stuff out of Los Angeles, because out of LA, we don't really make suiting, tailoring that well. We make denim, we make jersey, we make things that like touch water. And I loved craft. I love embellishing things and making something really special and stand out. And
how are you picking up those skills?
Fortunate enough for me, the law school I was in the fashion district. So I would just kind of leave class and, you know, go through the various buildings and find different sewers. And you can literally knock on doors and this person does embroidery and this person's a pattern maker and this person does this. And there's a wealth of knowledge you could pick up in each little studio. The most important idea I've ever had is really that failures and disappointments are just illusions, and the real variable is time. So if you could move forward without fear of failure or disappointment and do as much as you can in such a short amount of time, you'll continue to learn and grow.
So you start getting these freelance gigs, and so you're consulting, helping people that want to fabricate locally, basically?
Yeah, like at first it just started as like freelance small things, like this person wants to start a handbag company. And it grew into like smaller projects, to consulting like small brands, to like bigger brands in LA that were come here to like the wash houses or whatever, or some of the big denim brands. I would do like freelance consulting, freelance product development. I would kind of like pretend I had a big agency, and it was really just me. So they're like, yeah, design, these 15 things. And I would be like, all right, sure. And I would come in with like a rack of just like 30 things. And they were like, everybody's jaw would drop because they'd have like 9 designers in there. And they're like, how many people are on your team? How did you make this and this? And I'm like, oh, we don't talk about the studio too much. But it was really just kind of me, like, just making it work, Not everything I made was good. I made so many like really bad things. I went down every mistake. That freelance time like let me make things and learn on other people's dime in a way.
So at what point in this journey were you able to quit the 9-to-5s and really fully become someone who works in fashion?
I think there was a time when I like first started having kids, and you have a family, so you have to start taking things a little bit more seriously. You stop thinking about like next year, you think about the next 10 years and what that looks like. And I had been freelancing and starting small brands here and there. None of them really like took off. And there was a thought that I really want to, give it serious like 200% to see if this is really like for me, and like fully kind of commit, because up to then I was just kind of being creative and doing things like day to day, but there was no like big giant picture. I think by the time I had my 3rd kid, we'd saved up enough money, and I was working on a project in my head that I started to make little things for, which would end up kind of being Amiri. It was just kind of based on the premise that luxury goods and that thought of luxury and exclusivity is a destination for a goal that not a lot of people try. So instead of kind of just chasing, like middle of the road things, I love to make special things. And if I just put more care into the materiality and the fabrications and the thoughtfulness, and then was able to have a platform to display those, it would be hard to kind of deny it. So I designed the first collection for Amiri in a basement in Hollywood.
Where did you get the startup capital to sort of get that ball rolling and produce that first collection?
Yeah, we had saved up between like me freelancing and everything, we'd saved up like $30,000.
You and your wife?
Yeah, okay. Yeah. And since I did almost like everything, I didn't need like 15 people to put together a collection. And I guess this is kind of where a little bit of a clever like strategy came into place. Instead of me walking into the store, I just had a few friends, like each one knew the buyer. And I'd say, do me a favor, just mention this brand to them. Don't make a phone call, like don't like try to connect us on the phone, just mention it to them. So like someone would be like, oh yeah, there's this brand Amiri, you should look into it. And they're like, oh sure. Then a week later, somebody like, oh, by the way, there's a brand Amiri you should look into, And so many different touch points. By the time I made the phone call, I got in touch with the buyer. I'm like, hi, I have this brand Amiri. She's like, I've heard of your brand everywhere.
As the idea of the brand comes into focus for you and you're putting together this collection, at what point do you settle on using your name as the brand, and how did you think about that decision?
It was really going to be my last like try at this, I had a bunch of false starts leading up to it, and being 38 years old and carrying a sewing machine into a basement with like the oil spilling on you, you know what I mean, while your other friends are like in law school, medical school, and professionals. It was such an endeavor, and it was so much like risk involved, and it was so personal that if I put my name on it, if I put my last name on it, it would have to be really good because my kids are going to have that name. So naming it something else wasn't really like a thought in my head.
Fully invested in the brand that bore his name, Amiri kept a singular focus on elevated executions and immediately saw explosive growth. Not content to rest on his laurels, the designer and founder would push the Amiri brand beyond its core offerings, but soon would look to new partners to fortify the next stage of the business.
So you get the collection in Maxfield. Obviously, they are going to merchandise it on the floor and whatnot, but did you have any other sort of strategies around marketing it or creating audience and demand?
If you got into that shop, other shops around the world would call you. And when they would call, I would say, sorry, we're exclusively at Maxfield. They won't allow us to sell anywhere else, which is actually not true. I was not exclusively there, but it just sounded better. After years of like trying to convince somebody in your booth to buy your jacket or your sweater, to say no was even more powerful. You know, it made buyers want that product more. So I took that year, and instead of trying to sell like a bunch of things, I just kept refining the 6 items I had.
What were those 6 items?
It was a pair of jeans,